Discord for the stream link.
Like what happened?
Yeah, like what's up?
All right, now we should be up and running. Okay, now we're actually on. Let's see if we got that right. I can probably.
We live.
Yep, we're live. We are on. All right.
Yep, we're live.
Okay, so there's no echo though, right? Everybody's good?
Yeah, it's good on my end.
All right, let's see how it looks on the stream. Yeah, I guess we can do it this way. If you want, I can send you guys the link to the YouTube channel, and they can write their comments there, I think. You want to do it that way?
Yeah. I have the link up, so I can
through.
I can see the chat. I think I'm in a good spot.
Okay.
Yeah.
And
the only thing, Alec, can you comment in that chat? I cannot. It says create a channel to join the chat.
Create a channel to join chat. Yep.
So that's kind of weird.
wait, what's going on?
So weird.
Wait,
we cannot chat. Like we can't type in the chat.
You can't type in YouTube?
No,
No.
that's okay.
Yeah.
I was going to post something in there though, but maybe I'll just send that to you, Anon, and then you can post it in there. That's all good.
Okay. Let me just make sure I've got up. Let me
Yeah,
see.
apparently I'm like an idiot. They're like, you need to log into YouTube.
I
might as well just
YouTube
use-
boomers.
Yeah.
Let me just give
AKA.
YouTube, let me give YouTube a call. I'll see if they can help us out.
Yeah. Let's go give him a call real quick.
Pretty good. All right, so let me go ahead and see if we can get a little bit more people on here.
Sure.
I'm going to just throw it on Twitter real quick that we are live. All right. And we might be able to get DZ on here. And DZ actually is our options guy, and he's like really he's created his own black shoals, and
Oh wow.
yeah, he's pretty good with it. He's a math guy, so he's actually a meteorologist by trade, but has gotten into options trading because he's like, it just makes sense to me.
Yeah. No, that's interesting. That's awesome.
Yeah, so I think if we can get him on here also, he might have some questions, and but really, really smart guy. We'll just see. He said he was going to be busy probably, but thought we'd throw it out there.
Sure.
All right, so let me go ahead and take the link real quick. And join us for a live stream. Markets and brokerage. And then I'll link the thing and see if we get any more people from YouTube or from Twitter. All right, let's just do that. I'll put maybe DZ. Okay, here we go. I don't have that many Twitter followers, but we can give it a shot. All right, and then let's see. Put it in the Tyrion as well.
I see
21.
Tom Elrod is watching The Big Short right now.
Such a good movie.
Great movie.
So
Conference table,
yeah.
slapping down the Jenga blocks. God.
That scene is pretty badass. All right, so let me do this. Let me go grab the link real quick, and it should be. So
hope we don't disappoint you. The tangy gnat, tangy gnat.
The tangy.
I don't know what that is. Tangy gnat.
Yeah, tangy gnat.
Yeah.
I was gonna say, I know we had a lot more likes than this, so I'm thinking maybe everyone just got confused on what. So I'm gonna just do it at everyone.
No worries.
The live.
Love the strippers in the beginning. There you go.
Yeah, the live.
Tom Elroch just pushing pause in the beginning of the movie.
All you guys are on with us. It's streaming on YouTube, and I'll link it. All right. All right. All right. A synthetic CDO. God, I was just watching that the other day too. I had to go back and watch it because it was making me just angry about the whole. I think what's his name? Was it Mark Castelbaum? Was that the guy's name? Or Mark Baum, right? Mark Baum, yeah.
I was gonna say,
one of the two people.
My last name.
Yeah, one of you guys is
one of our uncles.
Yeah.
I have a cousin, Mark Baum.
Do you? Yeah. So I think he was my favorite character in it, just because
so good.
He was the angry
That was Steve Carell, right?
Yeah, Steve Carell's character.
Yeah, it's so funny.
Yep.
Yeah, he was. That was probably my favorite character, besides obviously Jared, or what's his name? The real guy's name was Jared. I think
Ryan Gosling.
Yeah. Right. I mean that. Just he's so transparent. I almost respect him. Okay, here's a question for you. Coming from Awesomeness. Do you want me to read it to you?
No, I got that, and Anon, I'll actually pass that one off to you because I didn't know much about the Wyckoff phases. You're the one that turned me onto them. So if you want to sort of take that first question, I think that might be... Okay.
I mean, I'm sure Alec knows about it also, right?
That was Alec.
No, that was me.
Oh, that was? Okay,
Yeah.
So, so basically, I'll put up my screen real quick. You guys can see this, right? So I think if I just put a picture up, I can kind of go over this real quick. Where's my pictures? There we go. Okay, so I'm going to do a distribution one first. So right here, you're looking at Wyckoff distribution. And what this essentially is this is where smart money has decided they're going to get their money out. And typically what happens is, as the stock's getting pushed up, they decide that they're going to start selling on these, down parts right here, right? So this is when smart money's getting out. And what they do is they slap the ass to get it back up. And then they're pulling out their money in waves, basically, until basically they've gotten their money out. And now the only one that are left are holding are probably retail traders, or, if for example, that money's coming in every single month or week or whatever, however distributions work for like 401ks. So those are the people that are buying in retail, who always bought the dips, but once you kind of see this come out, right? These are called automatic rallies, right? So that's what AR is. You've got at the end of this where the just bottom falls out, and then buying the dip worked for so long in bull markets, but when they decided to take their money out, right? And let me see if I can pull up real quick a chart of the SPY, and we can kind of take a look at the top, right? So let's get this. You guys can see this, right?
Yeah.
Okay.
Yep.
So let's go back to the top of the SPY, right? So for a long time, right, this was COVID, right? So we have this, and we're just in this constant bull market. Everything's great.
Yep.
But look at this up here. We zoom in a little bit, right? So we have this, and let me pull up the Wyckoff with it, right? So if we kind of put these next to each other, right? And this won't be exactly on scale, but where's the picture there? So you have the thing coming up, right? And so you're making these like tops, right? You get this final top right up here, and then from then on out, it's basically distribution. Then they keep pushing it back up, but eventually the bottom starts falling out, right? And I think this is just the start of, like, this was that first down part, the dead cat bounce, and we're going to go through now, and we'll probably go and see. This is where I drew this line out. This was the gaps left over from the November elections from last year. So I think we're heading back to that level, at least. That's the first like area, and then from there it's just going to be what's going to happen from there. But like typically that's what you see with Wyckoff is these guys are basically trying to take their money out at the top and then reposition themselves to basically make money on the going down. And Alec, you could probably speak to that part.
Yeah, well, and that's sort of where I just think, like, you know, I know there's some people who are in the technical analysis camp. There's people who are not. That's where, to me, it sort of speaks of like the importance of really kind of understanding where those lines of support and resistance are. And I think this is a good example of that is if you pull up that Wyckoff distribution, that other chart that you had, you can sort of see like when things start to fall below that support
These support lines right here.
That's where like the rug gets pulled out. And so I think, and I've gotten caught in this myself, you know, where it's like, okay, well, something falls a little bit below support, and it's like, all right, I'll give it another day, and then it's like, by the time I'm you know, wanting to take the position off, it's way below where that support line was.
Yeah, now you're down here, and you're like, I should have known.
Exactly. And so it's these types of distributions, and you can see, you know, like you can see that sort of resistance playing out. And so, you know, as it comes to sort of short-term or swing trading, which is sort of where I like to live a little bit, playing either that support line or playing the resistance line for a move in either direction, I think, you know, a lot of times those types of lines can be reliable, and you can either try to play a move of, hey, maybe this is going to be a breakout and it's going to go above that resistance line and let's see what happens above it. Or, you know, you can play sort of that support line for, you know, a move. Are we going to get that rug pull, or is it going to bounce up again? So it's sort of hard to time, right? Like when you know the support line is going to act like support and bounce back up to that resistance versus
correct. Like I would say like right around here, like you had these all kind of around the same level of support, but then once it fell through that was a huge indicator that, and then you acted as a resistance there.
Yeah. And if you here, so look, so if you keep scrolling to the right, keep going and then go down. So there's that first rug pull. And then if you go up, boom, right there, that's that support almost acting as the line of resistance right there.
Yep.
And then it hits that again and goes back down. So.
Yeah, and so I think the next area that I'm looking at is in the 340s was where all those gaps are. And I would imagine the algos that run the, you know, like what they're buying, what they're selling, they're coming for this right now. Like this was an area of like less liquidity because if you look back at all the way down here during the election cycles, you see all these gaps that left in the daily. Like you can't see it as well here, but there are gaps in the daily all around here. The reason I remember that because I was actually short here.
So you know it well.
So I know really well because I was like, oh, okay, going into the election, like it's going to be contested, it's going to be a mess, and they gapped up like 7 straight days in a row. And I was like, what is going on here? But everybody was bearish back then, and that's what they do. When everyone's feeling one way, they're going to just make some money.
Yeah. No, I and that 309 baby shed some light on today's market action. All signals were bearish and then market turned to bulls. That's sort of a really good segue into that, right? And Anon, one quote that I like is, I forget where I heard this. I've heard it from, I feel like, you know, 1,000 different people have tweeted it, but the market at any given moment tries to fuck up as many people's day as possible. Yeah. Like it's just about like, you know, all of the expectations, proving like as many of them wrong as potentially possible. And I think like today was a good example of that. And I think a lot of like the intraday, so 309 baby, to your question, my take on a lot of the intraday action, it's really not random, but it's most like a lot of it can be kind of chalked up to supply demand in supply zones. And, I think the low 370s, 3700s in SPY, like I think that was an area of supply. So we sold off down to there. And then I think you saw a lot of that supply kind of start to kick in, and you saw that end of day rally.
And also they're like, oh well, we may have to go to 1, maybe 75 is we need to go to 1.
Like I just saw that like a 1% rate hike is now the odds on favor, right? It's like an 80 or 90% likelihood of happening, which it's sort of funny. Like today's market, I feel like it's sort of like a parallel universe where bad news is good news and good news is bad news, because bad news could signal further easing and easy monetary policy, whereas good news might signal things getting tight again. So it's just like it's sort of like a topsy-turvy environment.
Yeah, well, I was going to say, and it really, I think, boils down to this, and I'll bring this up real quick for you guys. I'm just screenshotting it real quick. Did I turn off my screenshot? I think I might have. Oh, shoot. Hold on. Let me turn it back on. I think it's called like green something. Green shot. Here we go. Okay. Here we go. So I just think this was kind of important, and let me just grab out this right here. So I'm pulling up the SPY's options, and we can just take a look at my favorite game. How can we screw over the most amount of people?
Yep.
The market maker's favorite game. So here's the SPY, right? And so right now, this is where we're at, but OPEX is tomorrow, right?
Yeah.
So where's max pain, right? Where's going to be the most amount of people getting burned? And I would imagine there's a ton of puts right now, right?
Yeah. Yeah, I mean, you can see that.
This is the OI, this is the volume, right? So there was a bunch of 370 volume today.
370, look at that. 305. Yeah, like that's...
Yeah, K. Yeah,
that's insane.
Like, that's pretty nuts. Like, I mean, look at all that. So, yeah, sure, let's push it up, right?
Yeah.
And then on this side, you've got 380 is the next like big one, but more people have puts right now than calls.
For sure. I mean, look at that put call ratio. What would you estimate that at right now? 2 to 1? More than that? 4 to 1? 5 to 1? Like that's huge.
Hey, anyone that's on YouTube, does anyone have unusual whales or anything that can pull up the SPY? That's the only thing I don't have right now is an option scanner, but I will get it eventually. Does anyone have unusual whales? Or let me see if I can ask on the Discord real quick. But yeah, I was going to say, I would imagine the put call ratio is, oh, you know what we can do? Pull max pain. That should tell us, right?
Mm-hmm.
Max pain SPY. Give me a second. Dan K said he's got it. Can you tell us the put call ratio on the SPY right now for unusual whales? And I'll pull up max pain on the SPY real quick. Because I think at the bottom of this thing it tells you a put call ratio, if I remember correctly.
Is this just the change from TD?
Yeah, that's just TDs.
Yeah.
But here, we can bring this over real quick.
I would guess it's just looking at this. It's got to be.
So here are all the puts.
This expiration, what 1.43? Is that Dan K? Is that for tomorrow's expiration?
Yeah, look, here you go. Look at this. Puts are red. Calls are green.
Yeah, that's wild.
So, yeah, what would you do? You push up the price.
A little bit, yeah.
Yeah, I mean, that's our favorite game. Whenever everyone's betting one way, it's just go rug pull everybody and make some money. And who loses? Retail. That's why I buy Theta. Like, I actually have some SPY, like 350 puts, but, like, they're for January.
Pretty far out, yeah.
Because I'm not messing around with these weeklies. Like, you get burned that way. I know it's going down to 40s, so I bought those for January personally. But like, that's not financial advice. None of this is financial advice. But for me, I don't want to mess with a theta because the theta right now is killing people, and with everything whipsawing the way it is, like it's messy. All right, there were 100K put contracts below 380, and look where we are. And after hours pushed up to 380 almost. Look at that.
Who, again, not financial advice, but if I were betting, man, I might say 380 acts as a nice little pin tomorrow.
Yep. So, and then obviously accumulation's the same thing. When all retail gives up hope and they're like, this stock sucks, this thing's horrible, that's when they go long. Mm-hmm. And they push it back up. Like I was showing people, here it is. Let me pull it up real quick. So yeah, like you go through, right? And so just the stock is a falling knife, right? Just horrible. And then it starts accumulating in this range. Like I can pull up probably 18 different small cap tickers that probably all look the same right now, where they are going through accumulation and eventually they'll get pushed up again. Let me see if I can pull up real quick, just like a couple of them for you. Like, oops. Oh man, here we go. Yeah, so like, I just want to show kind of like, so Ethereum got pushed down for like literally like so long. Like this was like 6 months of just constant like bleeding. You finally got down here, right? You start chopping around, accumulation, hit the spring, which is in phase, I think, C. Or this particular schematic 2, it's in B. And I think schematic 1, I think it's in C or D. You hit the spring. But basically, you hit the spring test, and then from there, that was that 210 level, and then you ran. And then it starts over again. We'll bleed down, we'll accumulate, and then we'll run up again. And they're doing this, I think, and you can correct me if I'm wrong, Alec, but basically they do this because from 2 to basically, if the company's not going out of business, 2 to like 1 is not a huge amount, so it's easier to just let it run up and reshort it.
At a better better location.
Yeah, like better shorting it at 5 than at 250 when... Right. There's annoying retail buying it. Because if you leave it hanging down here too long, then typically it's more you're safer shorting it up here, right, than to short it down here.
Well, yeah, I mean it's a much better location. It's much by the time it builds up and explodes, and you kind of can trap people. It's much better to do it that way than when it's kind of basing. Yeah.
Because from here to like here is not that big of a move. You can't make as much money, so like they let these things go up in waves. I was just thinking about like some of these like falling knife stocks. Like here's one that's interesting, right? So DTC, that's Solo Brands. Mm-hmm. They IPO'd, and then since then they've just been doing nothing but bleeding.
Yeah.
And now they're starting to baseline, and then what I expect is another push down, and then maybe a run up. And you can probably do this for, a dozen other stocks.
Yeah.
Especially small caps right now, because nobody's wanting to touch them. So the algo is just able to do whatever they want with them. Mm-hmm. Especially when they have, like, tiny market caps, like, 250, 400K market caps,
Well, and that's sort of the tough thing about a lot of these names is it's not necessarily a matter of if. It's just a matter of when, but that when could be years, right? Like it's not like these can sort of bleed out and they can like slow bleed and they could kind of do like different mechanisms to sort of stay relevant. But like that squeeze might not like it's just not predictable when that squeeze is going to happen. And you look at the chart of almost any stock, like there are 50%, 100% squeezes in almost any name that gets beaten down that way. But it's not, at least in my perspective, it's really difficult to nail down the when, and so that's why it's a really difficult game. Again, not saying that it's not a matter of if, like those rallies happen almost all of these names, but it can be a really long time. It can just be tough to sort of nail that down.
Yeah. And I was just going to show, like, here's Weber, right? Weber IPO'd, I guess it was at 21, August of 21. Same thing. They got beat down, hit the 5, hit a spring, ran up. Now it's consolidating again. Like, there's dozens of these things. And Weber's not like, oh boy. Do I need to upgrade?
What's going on?
Oh, apparently I need to upgrade. Hold on.
Oh. Inside, sometimes you can just like cancel it.
Let me see. It said our stuff is going to end in 10 minutes, probably because I left it on. So, all right. But yeah, anyway. But yeah, I was going to say, so have you looked at GameStop? I know you can't talk about individual tickers, but you can talk about like just fundamentals, right?
Yeah.
Have you looked at their NFT stuff?
I have not.
It was interesting. I actually had gone on there and taken a look at the site, and so it's in a beta phase right now. It's still like a beta, but basically what they do,
yeah, I think it's still in beta.
Yeah, but they've launched this thing, and they basically, the thing I think is interesting is they're going to be getting all these transactions from all these games that are going to be getting going on level 3 or Web 3, I think they're called. Yeah, Web 3 games.
Yeah, Web 3.
Yeah, and so they're basically creating a marketplace where every single transaction they're getting like 2.5% of all the Ethereum and stuff that's getting traded across it. And so, like, I started looking through, and I always thought these, like, NFTs were kind of, like, no offense, but, like, kind of silly. But I saw some that actually were pretty cool that, like, I was kind of impressed. It was this one right here. So, have you seen this, like, some of this art on this is actually pretty cool. Right, so like I was looking at that, and they made one for I think it was called, what was it? Recovered Memories, and this is like totally my style. Like these like kind of sci-fi, like that's cool.
Yeah, it is kind of cool.
Yeah, so but apparently
different than a lot of the NFTs I've seen.
Yeah, so this one's like actual like art. Like I actually went out and I got like this one, and I got like, I never thought I'd buy an NFT, let alone, but like. I got like some of these are actually pretty neat. I'm like, all right, I could get down with this. Like throw some of these up in my house or something, like in my basement, like. But yeah, I just thought this was interesting because this to me was like actual art.
Yeah, definitely evolving for sure.
Yeah, so I think it's getting a little bit better than just like gifs of like cats and stuff.
Yeah.
So yeah, I thought this was an interesting thing, and then I started looking at like. Today's like price action, like, can you explain to me something like this? All right, so from this perspective, right, stock, and I already mapped this out. This hit exactly off a level I drew out on my TD, but I'm not going to open my TD right now. I literally mapped out this exact spot, and it bounced right off of it as a double top, and then that's the resistance, right? And then, but this price action right here. How do you do this from like a funds perspective? Like, is this just literally like it wasn't like crazy volume? Like, I don't know, it was like 200K shares maybe caused a $10 drop in a matter of 3 minutes.
Yeah, I mean, I think a lot of that goes back to supply level. If there's not a lot of supply to work through, and it's sort of just eating up everything in that space, I think you can get in these names especially. I think you can get big drops pretty quickly.
So the question I would think is like, normally when you're unloading though, right? So when you're unloading stock, don't you want to try to usually get the best price available? Like you would bleed it off slowly so you don't drop the price too quickly.
Yeah, I mean, obviously, like ideally in an ideal situation, yeah.
Like literally this hit, I believe, like 3% RSI or 3 RSI.
This was today, right?
Yeah, this is today.
Like literally watching this.
Yeah, so like in a matter of 5 minutes, it dropped all the way down to like 3 on the RSI.
What was the market doing at that time? Obviously, nothing to this effect, but
Yeah, I don't even think the market did anything even close to this. This was just GameStop because it's, of course, GameStop.
yeah,
I was gonna say it's GameStop. Yeah.
a lot of these like really, I don't want to say highly manipulated stocks, but like extremely volatile stocks, right? Like
Sure.
there's sort of anomalies like this. Like you don't see that in Apple. You don't see that.
No,
I mean,
because people are trying to get the best price. They're literally just trying to shake, I think, the tree.
Yeah, I mean, I don't have a good answer for you. I mean,
so
clearly there was someone unloading shares, but like, yeah, like volume spiked a little bit, but it's not crazy. You know, like
yeah. I mean, if you zoom out, like if you kind of look, like there, it wasn't like a huge one. So like, here's the volume. Like it's increased, but if you look right after, the buy side actually came through and was just as strong, but it didn't move the price.
yeah.
Which that's what I've noticed on GameStop. It happens all the time. It seems like, but you know, I've been waiting for this to happen because this is what happened back when they were trying to like shake people loose and get rid of like day traders and stuff like that.
And where'd they close? So they closed at 136. Damn, I didn't realize that. I thought they were battling back into the 140s.
They were, and then they pushed them down end of day too. So like,
oh, okay. Can you go there?
Yeah, end of day.
Yeah.
Yeah, so end of day.
This was what, like 1-ish, 2-ish?
That happened at, let's see, exactly like 101, 102.
Yeah. Okay.
So right when everyone gets back from lunch, right?
Yeah.
Right. Sits back down.
But yeah, I was gonna say I haven't seen that in a while on like these GameStops, and like it happens from time to time, but this was a little more extreme. Like $10 in like 5 minutes seemed like a pretty extreme move, and I haven't seen that in a while. As far as like normally that happened when they were trying to shake us during their initial run up. So I'm not like reading into this, but I did notice it bounced exactly off the level I drew out, and then as a double top, and then it basically had that thing happen right at like 1 o'clock, and I was like, that I've been waiting for that drop.
And then what was the low on that? 138 on that move?
The low of the day, I think, it got all the way down to 135.
135 on that move, that 1 o'clock move?
136 or 137, something like that. I think somewhere around there. Yeah, I think it was 136-ish.
Okay.
So that it went from basically, it hit a high of 151, and then it was in like the 150s just chopping around, and then it kind of moved down to like in the 147s, and then literally 5 minutes later it was down at 136. Like that's an extreme move.
Yeah, it's huge.
And the outflow was not even that much. Like if you look, like inflow, outflow, I know this isn't perfect, but like I imagine if we looked across the board, it wouldn't be that extreme. It's just, to me, this looks like bid whacking, when basically you just unload shares as fast as you can.
Yeah.
Not looking to get the best price, but basically to,
needing to get out of your position.
Yeah, or just trying to scare retail into selling, making people nervous, day traders nervous, whatever you want to.
Yeah, but then it sort of bled out the rest of the day. So
yeah, so like obviously somebody's taking profit, maybe.
Yeah,
it could be. I mean, like I was just noticed. I mean, they've had a decent move up in the last couple of days. If I go back to the like daily,
wasn't there some announcement on GameStop like a week ago that caused them to sort of like?
Yeah, so it was the stock split. They announced.
That's right.
Yeah, so they're doing a stock dividend. So. Where is it? We're still live, right? We haven't cut out on Zoom.
No, I think we're good. Yeah.
Okay.
Yeah, we're good.
They said you have 10 minutes left, so I don't know, but anyway, yeah, I just want to point that out because I did notice that today, and I was like, because I mean, if you look right here, it almost perfectly lines up for if I drew like a price line.
Yeah, and just like as a question, like in general, out of like this community, just like so we know, does the majority of people here, and you guys can comment if you want, like trade options? Is it primarily stocks? Like, just day trading and stuff like that, or like what's kind of like the split? I know there's a split on the channel itself in terms of the on the server with like channels and options chat, main trading floor. Ethereum obviously has its own right, but just out of curiosity.
That's a good question. So, like, I think the majority of people are like they came here because of Ethereum in the beginning. Oh, are we so good? Your free meeting has ended. Can you guys still hear me? Oh, I think I lost the guys on Zoom. Hold on a second. Can you guys still hear everything or no? All right. Let me try this. Let's see if we can get that going again. All right, so the stream's still going, but the guys dropped off real quick, so let me get them back on. All right, so let's try that again. New meeting. Yeah, I'm still good there. I just need to invite these guys back. Give me a second. I think we can make a new invite. Microsoft Teams is free. We can try that next. Let me just copy the link real quick and give it to these guys. There we go. I don't have you on there. Alec, can you hear me?
I'm here. Yeah.
Okay. And I just send it to, let me just at J Sharp. There. Okay. We'll use our free. There we go. Now we should be back and run.
There we go.
Back in business, baby.
Yeah, we'll just get around it by.
We're on that freemium junk.
Yeah. I'll have to stop being so cheap.
No, but I've seen some of the comments, and it's kind of what I expected. So yeah, learning stocks, learning options. I don't day trade or do options. Both. We can fade a gang. Yeah. So I think.
Yeah. Do you want to show here? Why don't you show your screen?
It's just kind of like just to preface that, like I totally understand that. I personally was one of those people that what we like to call like options curious. I traded stocks, but was like intimidated, frustrated, a little bit overwhelmed. I kind of just like glossed over. I think everybody knows that feeling. You just gloss over when you see something, and for me that was the options chain. I was like, yeah, I'm gonna go stick back to what I know. And we've kind of seen that repeat itself with a lot of people, like within our friend group, and then obviously on a much broader scale. And we see a lot of like looking to learn and stuff like that. So I think what would be helpful a little bit is to just kind of show like the way that at least we've reimagined it, by just trying to make it a little bit more transparent of a process, and also accessible for people looking to learn, but also Anon, like obviously you've tried out, like just a much more convenient solution as a whole, right?
Yeah.
So instead of 15 clicks on TD or Fidelity or anything like that to place an option spread or option general, and that's if you know exactly what you're looking for. On Optionality, it's actually only 6 clicks. So just something we're looking to just get a little bit more feedback on, but some encouraging traction nonetheless along the way. So let me try to share real quick and let me know when you guys can see it.
Yeah, I can see it.
You got it? All right, cool. So
stream,
yeah,
you can see this, right? I'm just making sure the stream can see it.
Wait, no, Adam, it looks like your selfie bathroom pics are popping up.
Oh, shut up, dude. I don't need that type of anxiety on a live stream. So this is just like screen recording from the app. And this is like when you log in, this is like exactly what you see. So this is literally like less than 90 seconds, but we can just work through it real quick. And this way, at least you guys get a little bit of a taste of kind of what we're building over here. And for those of you that are kind of interested in maybe checking something out, or like we call options curious, we're just really looking for a different type of speculation. Maybe this suits you. If not, no worries.
And Adam, before you keep going, we have a question.
Go ahead.
Which types of options do you offer? Debit spreads only right now. So we do anything from 1 week to 1 year. And so we have multiple risk buckets. We have some that are already in the money. So we do kind of on the short theta, short volatility side. Then we have also some that are kind of at the money, so a little bit more neutral. And then we offer some that are out of the money. And that's also kind of spanning from the 1 week to 1 year. So debit spreads only, but we're kind of spanning the spectrum of risk and time.
Yeah. So more or less, this is your dashboard with your active positions. How do I get this thing off? I don't know why this is still staying on there, but so if you click the trade button in the middle, kind of similar to what you've seen on like Coinbase or something like that, with the trade button, you'll be able to filter down through gainers and losers, just trying to show stuff that's moving, right? With options, you're looking for some volatility, so you want to see stuff that's moving. So there's usually anywhere from 5 to 15 gainers and losers that are up to the second updated, all throughout the day. And you can see the ticker, obviously the price, and then the percentage move at that point. Pick any stock here. Obviously, you have to go with a crowd favorite with DraftKings. I was going to do Ethereum, but I just figured for liquidity purposes, maybe we show something a little more. So typical chart that you'll see here. It's obviously, not a candlestick chart. We try to do something that's a little bit more approachable and accessible for people that are kind of coming in off the sidelines. And you can filter through 1 day, 1 week, 1 month, 3 months, 6 months, 1 year. And then obviously tap and scroll, of course, as well. And then really this is kind of the whole premise is not needing to have industry terminology or vocabulary, needing to come in with like a 3-month crash course or something like that. It's right, like,
does it go up or down?
Yeah, you think it's going up or down, and that's really the only decision making factor you need to know, like right then and there. Obviously, you have some market stats, you can expand those with a view all, some sentiment gauges. This kind of goes out and scans and finds all the positive and negative snippets, or positive and negative sentiment in the internet, comes back, gives it a score. It's okay. It's not, like a dead on ringer, but it's just trying to give a little bit more color to what's going on than obviously, relevant news. So go back up, I click, I think the stock will go up. And then this is really the difference maker, the differentiator here for you guys. We spend a ton of time, ton of MVPs, a ton of build, measure, learn cycles, ton of research, just trying to figure out like what the fuck people actually need to know at any given point in time to make like the next decision on that screen. So the fewest amount of clicks with the next decision at that point. So filter through your expiration, 1 week, 2 week, 1 month, 2 month, 3 months, 6 month, 1 year. And then we have internal liquidity filters that things have to pass to even show up on this menu. Alec can get into the menu a little bit if you guys have specific questions, but we filter it by 3 risk buckets. So you'll see, so I'm going through some expirations here, and you can see that some of them didn't show up for all 3, but lower risk, medium risk, and higher risk is there at the bottom. 3 trades for each bucket per expiration. So at any given point, there's a ton of trades. But again, they have to pass certain liquidity filters for us to even show them on here. And then you'll see all you need to know is, the entry cost. One thing that's important to note is we do not extend margin. We don't think that for people that are trying this out, you should really leverage. And that's just kind of a principle of where we're at. So your entry cost is always going to be equal to your max loss. So if you're getting into a trade for $15,
you can only lose,
you can only lose $15, like straight up. much more similar to like a FanDuel or DraftKings in that respect, but it's more, again, focused on transparency before you place a trade, which we think is super important. And then again, it's also an accessibility play for people that don't necessarily know, the PC ratios or the option symbols or the Greeks or anything like that. So you have your break-even price, your entry cost, what the multiple was. So 2.23 here to make 34, and then some of these can get far juicier. We have definitely stuff that's like $5 to make 200. 10 to make.
I've got a couple of those.
900. Yeah, because you're a degenerate. And yeah, so again, we try to make it convenient. You click your stock, and then you can trade up to 5 spreads right here, which would technically be 10 contracts. So you could do 3, you could do 4, and it would pre-populate your exact potential loss or your potential gain. Market order, limit order. This is a big thing, and I know Anon, this is something that you were like, fuck yeah, about. We default to the midpoint, which is the way it should be. You don't need to calculate that yourself. You don't need to do anything. We actually default to that. Here, the bid ask, it's pretty tight, but we default to that 28 cents. That's actually not the way it goes for
most other
a lot of brokerages. Now, for us, we can I think we talked about this a couple weeks ago, but for us, it's actually, we can understand why other brokerages wouldn't default here, because it has a direct effect or potential effect on execution times. And from a user experience perspective, do you want people waiting longer for something like for their actionable step to take place? Or should you try to nudge them towards a better fill? We think it should be a better fill, and that's why we default to the midpoint. So
actually, that's something. A true story about 2 years ago when Adam first started trading options, and me and him, this was pre-optionality. We were trading. Adam, remember we were trading a Tesla spread, and I was trying to show you how it worked, and I did it on TD Ameritrade, and it was like my first time or two placing a spread on TD.
Just trying out different platforms.
And I placed a spread, and remember, automatically we were down $50.
Yeah.
And I was like, dude, what happened? Like, what? And we were both looking at it. I was like, because it defaulted to the ask, and that's where we bought it, and that's where like TD defaults to, and that was the first thing that was like, all right, that's ridiculous.
It's just bullshit, right? Like, it's a bad fill.
Yeah, I got those actually today on GameStop.
It's crazy.
Like, I put it in and then slippage, and I'm like, are you seriously? Like,
yeah, unbelievable.
So I'll just talk and just let it kind of rip through one. Oh, let me just point something out real quick here. Obviously, if that trade that you executed or that you put on, right, or took off, is it could go into this pending tab, so it doesn't kind of crowd your active dashboard, but at the same time, like, we don't want people to have to go digging for things, right? Especially something that's kind of waiting in the wings. So anything that's either being put on or taking off, whether it's 1 out of 4 spreads or the whole trade, it would be in your pending section, which you could tap into and populate the rest of the stocks or the tickers, company information and chart and all that kind of stuff. And then this is what you would see on your dashboard with all of your active positions, filtered obviously by closest to expiration. So this one expires in 37 days. This one expires in 65 days. And, like I said, we think that this is a nice opportunity. And a lot of the feedback that we've got is like, this is like a really complicated thing. You guys have put a really friendly face on it. The process is great. But more importantly, I just know what the fuck's going on. And like, that means a lot to me. So this is kind of how, we, our entrance strategy into the market. This is our app. Just wanted to kind of give you guys a little bit of a peek under the hood for, the way that we built this. Obviously, this is on iOS and Android. And we got a lot of questions last time with like, hey, like, how are you guys, like what are you doing differently? Like, what's your option chain like and stuff like that. So we just figured we'd put something together. Just a super quick demo for you guys to just kind of, like I said, take a peek under the hood of the way that we're going about it. And if Alec, I don't know, I'm going to stop sharing here. But I don't know if there's been any questions on like.
Yeah, you have a couple questions right now.
Okay. On like how we structure the trades or anything like that. But.
Well,
okay.
I think they want to know optionality. They don't show the Greeks.
Yeah, we don't show the Greeks. We wanted this to be a platform, again, entrance strategy. We wanted this to be for the new trader, for the beginning trader. And so, a lot of the feedback that we got with early prototypes, when I first had this, like my first prototype that I showed to Adam, he was like, yeah, this is way too complicated. And we got a lot of other feedback that was like, it was just too much, too many variables, too much extraneous stuff going on. So we really tried to boil it down to first principles. And so a lot of the metrics, a lot of the principles, we sort of went with the behavioral finance thesis of the paradox of choice, that when you have too many choices, too many, no pun intended, but too many options and too many things that's driving you towards a decision, a lot of times it can hinder decision making, actually, paradoxically. And so we tried to take down, again, to first principles to sort of just show like what people needed. So we don't have Greeks. Jason, I just saw your question. Possible, yeah. So that, like, again, sort of with like our thesis of like having an entrance strategy and then building up. So like we plan to, again, sort of start at this very base level, and then we want to grow with our user base. And so as people like we really feel like this is a great way for people to get into options and for people to start
manage their risk
process and manage risk and kind of be into options without putting out a huge amount of money. And then we'll kind of grow with our user base. And so we can start to add more advanced features. We can start to add more functionalities, maybe start to add different products, that sort of thing. But just really wanting to start off from a place of simplicity and build up from there.
And then you also had a question about if he doesn't play with options, can he still go into optionality?
Oh, yeah. Yeah, no, I mean, so right now we do only offer options. If you're looking, like, again, I just want to be careful about, like, just because we're FINRA and SEC managed, I don't want to try to say too much about, like, getting people on. But what I will say is optionality is a great place if you want to learn options, if you want to sort of dip your toes in and get into it and kind of see what it's all about. It's a really good place to start. And that's sort of, again, that's the place that we wanted to enter with, is like a friendly, safe environment for people to start learning how to trade options. And, we've gotten feedback that it is that. So I think if you're interested, if it's something you don't want to touch, like maybe it's not a fit, but if it's something you're interested in, I think that's what the platform is built for.
And can I just
go ahead.
So what I want to kind of explain is these guys are basically doing your debit spreads, right?
Debit spreads only.
Yeah. So what that means, though, is you're buying something bearish and buying something bullish at the same time, and what it does is it mitigates your risk.
Mm-hmm.
So
it mutes it a little bit. Yeah,
I was going to say maybe you should cover some of that, because normally what happens is retail goes in one side, and if it doesn't hit, they get absolutely wiped.
Yeah. No, and that's a great point. And so that's actually one of our pillars is accessibility. And a lot of our spreads, like you can see kind of what Adam pulled up there, a lot of the trades you enter for $10, $20, $30, even on some of the more expensive stocks, you're paying $50, $100. Like you're not paying hundreds and hundreds of dollars unless you want to be, or thousands of dollars, let alone for getting into equities. And so that's why we say it's a really good kind of place to leg into options and to learn, because you can get on there with a couple $100 and you can put on trades and you can sort of learn how it works without outlaying this huge amount of cash. And so that's one reason why option spreads are really good for beginning traders, let alone the fact that they're difficult to put on, but because they're very accessible, they're subsidized essentially.
Yeah, and that's the biggest thing, I think, is that the accessibility of option spreads is not a real thing, right? Like going to put on an option spread in any other platform, like you need to know what you're doing, and then and then you also are only looking at one trade where you can we think you should be able to, just as you do in any other experience really in life, is your ability to look at multiple things at the same time. That's also being able to manage your risk and kind of decide for yourself, like, what is my risk tolerance, right? Do I want to get into something for 50 to make 100, or do I want to get into something for 75 to make 50, right? Like, what am I looking to do here? And like, how can I personally make that choice for myself? So I think that that's kind of a big thing that I think kind of gets overlooked a little bit. It's not just about accessibility of like the wallet, but it's also about accessibility of like understanding like you as a person while you trade. Like the behavioral side of trading and like the emotional roller coaster that you all experience is like a very real thing, right? Like you shouldn't have to be wondering how much you're going to lose or make, or, you know, like that should be, you know, kind of smacking you in the face at any given point in time. Right. So yeah, that's that. And then I think one other thing that we were actually pretty excited about, if you'll indulge us, is just the convenience, I guess, that we've gotten the feedback around. I know, Anand, this is something that you had brought up to us, is we actually have like very advanced traders on Optionality that use Optionality to compare multiple trades at once and to purely out of convenience, because instead of them going on and structuring their own trades, you know, 10, 15 clicks, they're doing it in 5, and they're able to see up and down the chain fairly quickly with exactly what it would be and to get in and out, right? So that wasn't something that we were necessarily anticipating, and that's, Jason, back to your point, right, is like, hey, like, can this become more advanced? Like, of course it can. It's much harder to build something that to strip something down, to bring something down to scaffolding and create something that's very complex and make it simple than it is to kind of salt in complexity after the fact. So, but just as a pure convenience side, that was something that, you know, the value prop kind of really resonated with some other people, and we thought that was kind of cool. So yeah, exactly. Make it super easy for new option traders so you don't lose your shirt. Like, you shouldn't be, do I want to put the straight on, or am I going to pay rent this month? Like, YOLO, like, maybe let's look for another option here. Pun intended. So
random question for you too.
Yeah, go for it. Where is it?
Random Inc.
Oh yeah, I was reading that. Can you add a little bit more color to that, similar to hedge funds or market account with more control to the user over time?
I guess he's saying because you're doing like a spread. Because most of the time when you watch how smart money trades, they usually have like a long, like a position and like a shares, and then they have calls and they have puts at the same time.
Yeah. So it definitely is a more complicated, more complex trading strategy. A little bit more sophisticated, having those both on at the same time. There, I mean, so in our early iterations, there we had like butterfly spreads. We had like, you know, 4 contract spreads. Some even more than that. You know, like iron. Yeah, like they get crazy.
Exactly.
So there are more complicated strategies, believe it or not. But a complex trading strategy, it's a, you know, in our research, we talked to options traders who had been trading for years who had never put this type of stuff on. So it's really cool to be able to like access it. You know, we think as easily as is able to do on the Optionality platform. But
Alec, it honestly kind of probably speaks to like you unconsciously, maybe consciously, like from your background, right, with what you've done and like looking to get into a position that's mitigating risk already, right? Of like trying to find a position that, you know, you're kind of, you know where the parameters are. And like, that's not easy to structure on your own, right?
Yeah, and these do inherently mitigate risk. And I think one of the I don't know if I necessarily want to call it a fallacy, but one of the sort of things that draw people in about just buying naked calls and naked puts is, oh, there's unlimited upside, right? But very rarely does that unlimited upside really come into play versus having, you know, sort of a defined top on it that will then subsidize that break-even point. And so when you do the analysis on, you know, the amount of time that you're buying naked calls for, you know, a huge amount more than what you would buy a spread for, the amount of times that you're actually going to get benefit from that open-ended nature of a single call or a single put versus, you know, having that break-even point lowered so much on a debit spread, so that you're going to be profiting more consistently more often. That far and away that spread, and this is sort of what Adam said, is going to be more profitable. And it just that inherent risk management nature of it, it's sort of like the best kept secret, like no one knows about it. It's hard to put on. And so we want to like bring that to more people. We want to sort of make that very
pull the veil back a little bit.
Pull the veil back a little bit, because like this is what professionals are trading. This is what a lot of like the bigger players are trading. Spreads are kind of like a mainstay, and it's not a big retail thing right now. And so that's one of the reasons that we thought that this would be a really great thing, is because it's sort of bringing that access to more people.
Yeah. And you guys were going to do that thing, right? You were going to, the people that sign up today.
Yeah,
Adam, do you have?
Yeah, I've actually muted myself for once in my life. Yeah, so I think we said this last time, and it's just past 10, so it's unless there's any further questions, we can kind of let Anon do his thing. But yeah, I mean, for us, like these types of questions, obviously, hopefully your feedback on the platform eventually, that stuff's kind of invaluable to us as we're looking to really build like this grassroots, product for retail traders, by retail traders, like actually giving you what you want, right? So for us, like these types of sessions, like we're just so gracious. We're really appreciative of your guys' time, obviously being this late. So for us, that's really important. So what we did, Alec and I kind of put our heads together, and for anybody that's on this live stream, we can post it in the. Where do you think the best way to post it on Discord would be? I'm thinking just like on the YouTube one, like where the stream link is. Whatever.
Yeah, I think I made some sort of announcement one. I can just put it on the announcement one.
I'll just put it there. Yeah, that's fine. We'll do a $25 per person. As soon as you place your first trade, we'll just throw you guys $25. Really, just as like a thank you for your time, and hopefully your feedback, and hopefully you guys like it. And if you don't, like, that's even more important to tell us, what we can do better. But really, it's just more of like a appreciation thing. So after you place your first trade, you sign up, do the song and dance. But if you place your first trade, you get $25. And I'm going to post a Google form into the Discord. And that's just, it's literally like, I think 2 questions. But that way we'll have your email, and we could just sync that up with your profile from the app. And that way we can make sure that you guys get paid. So hope you appreciate that. We appreciate you guys. I think a couple other things came through while I was talking about that, but yeah.
So let me do these kind of in order.
And don't worry if you already signed up, like it's all based off the first trade, so it's not a big deal.
Yeah.
And we'll get it taken care of over the weekend and, over through the next week for whatever. But yeah, we'll get everybody squared away. No problem.
And Drake Beast, I can connect with you on Discord or something, so that we can work to get that application pushed through. Not sure what happened there. But so just reading the question in order. So 401ks, there are many different types of strategies in 401ks. So for instance, like, I have a small 401k that it's strictly just kind of passive index investing. But I know some people that are very active in their 401ks that do like covered calls or do protected puts, or some people do spreads. So random make I guess it sort of depends on what strategy in the 401k that you're talking about. But I have seen debit spreads both on the call side and the put side used in 401ks for sure. And then Senior Burrow. So can you guys explain how high frequency trading works? So there's a couple of different strategies. I'll just kind of go through what kind of I've seen and what some of the biggest high frequency trading strategies are. And this is sort of where like front running comes into place, and where if you've read the book Flash Boys, or if you know anything about kind of like latency and just like kind of insane like nanoseconds. So essentially, some of these high frequency traders, like, and this was sort of like a big thing when market structure was changing to electronic, kind of in like the early 2000s, and then kind of up until, even through now. it was essentially the fastest person to the order that could get to the exchange and get the order, could buy it, could see orders coming in, but then could sort of buy it and then sell it to that order before those orders were coming in because they were faster. Because they either had a direct line or they had technology that could essentially beat those orders to the punch. And so what that looked like was they would essentially like see big orders coming in or essentially then be able to sort of like front run those orders, take off fractions of a penny, buy those orders real quick, sell them to then that order that they saw coming in. And because they were just faster, they were able to, make essentially riskless, fractions of pennies on millions of shares a day, and essentially guarantee, like billions of dollars of profit a year. Now, a lot of that has been arbed away a little bit just because there's been so many players coming into the market, then it's just become like a latency race. And I think that's where a lot of the intrigue about like IEX, right? So they actually have a latency bump. I forget exactly what it's called, but they have like a hitch in their system on purpose to delay all the orders coming in so that they're all on the same wavelength. And so there's no one playing an unfair game of speed. So it's really like kind of an interesting thing that they've done, which is sort of like almost reverse it, right? And again, stands for Investors Exchange. So it's more like for the people, but they've almost gone back and said like, no, we're not going to have this like front running on our exchange. We're going to have everyone be on the same playing field. So that's one of the biggest high frequency trading. There are other types of strategies, but yeah, basically cutting in line super quickly. And like the scope of it is actually hard to even like think. Like it's like nanoseconds of nanoseconds. It's crazy. Like it's hard to even comprehend. But yeah, it's basically like, if someone's buying a stock, you essentially just real quick cut in line and like buy it in front of them and then sell it back to them for like basically the same price, but like a quarter of a penny higher.
It's insane.
It is insane. It's literally like a whole world in and of itself. And that's where like, it was sort of like during the, Silicon Valley boom of like the early 2000s, when then like any of the technologists that stayed in New York all started doing this type of thing. And it's like, then they started hiring these data science, like it just became this different world, right? And it became something that wasn't really finance and it was more like science. And it just got crazy. So that's, that's sort of like the biggest main thing. But yeah. And I actually have a question for everyone here. So something that we haven't talked about that is really interesting that I just kind of want to get everyone's thoughts on are these new inversed and leveraged ETFs, which, they've had these types of things on indexes. They've never had them on single stocks before. I just want to get everyone's opinion. Like, is that something that people have interest in? Is that something that people would stay away from? If there is interest in them, is it something like, what would the strategies be around them? And anyone that wants to just sort of like put it in the chat of like anything they've heard about them, or again, like interest or what they'd use them for. I'm just interested in that because I've personally never used them on the index level. But just would love to get sort of like feedback from people of, if they've heard about them, they have interest in them, that sort of thing.
So I've used them for the index ones. I've UVXY, back in the day, TVIX, also, like FAS and some of these, inverse ones. But, I think the one thing that I'm worried about is when you're doing it on a single stock, you are looking at like, is there an issue now because ETFs don't have to have the same transparency as the exchange, right? Like they're basically buckets, right? But they like from what I saw was like, okay, so say you're an insider, right? Well, you would have to disclose if you're selling, but if you buy an ETF, you don't have to disclose that. So is there a loophole now being created for basically people to like short or like, make money on their own information now? Like that's my concern because, I thought about this and I was like, well, that might be a problem.
Oh, I see what you're saying. So you're saying a way for insiders to sort of be able to short or sell their own stock, sort of synthetically.
Exactly. And you don't have to disclose that. So basically, you just allowed insider trading to happen. Because you don't.
Do you not have to disclose that though?
No, ETFs
on these new ones.
I didn't read the whole thing, but it sounds like with ETFs, that's quote unquote the loophole that they can basically just buy and hold these things, and they don't have to report any of that stuff. The SEC approved it, and that's
Anand, did you hear the SEC's commentary on it?
Yeah.
They were like, everyone I heard was like, I can't believe that these are approved. This is like the risky. I'm like, wait. The SEC, the ones that just approved these, everyone I heard was coming out saying like, these shouldn't have been approved. Basically.
Yeah.
It was the weirdest like commentary I've ever heard.
I think something's going on right now in the market. Something weird's going on, and I
agree. It's a weird thing where like this whole like the past 2 years has been like, okay, like we're gonna increase market transparency, we're gonna get to the bottom of market plumbing and structure, we're gonna stand up for the retail trader. This is almost flying in the face of that, and even the like individuals in the SEC were against it. Yet it goes through. It's just weird, you know. Like I don't really know what to make of it.
All right, let me ask DZ. We'll probably have to start up Zoom in 5 minutes anyway, but let me just see if he wants to jump on real quick. He's our options guy.
Sure.
To jump on.
And I do have to run semi soon.
Okay.
Where's Drake?
All right. So did that send out?
And I did go ahead and post that. So that's for Anand to post in the announcement section for everybody on here. Which again, appreciate your guys' time.
All right. So there. Let me know if you guys see that. I'll add that to the note that I just pushed out. Okay.
Yeah, and then there's a note that I sent you as well.
Let's see if I can add this in here.
You just edit your other thing. It's all good.
There you go.
And I do just want to have a blanket statement before I get off. So I am seeing a couple applications come through. Apex, so there's sort of like a dual approval system. So there's us, and then there's Apex, who's a clearing broker. Their system from like 7 at night Eastern time to like 3 in the morning Eastern time. They don't approve applications. They sit in like it's called custodian in progress state. So for anyone who's applying, you'll see like an email tomorrow morning, probably pretty early, go out about some of the approved application statuses. But for tonight, they'll probably sit in that custodian in progress state. So just FYI. Yeah,
and then on the back end of that, that's why we, again, just to make sure everybody's taken care of, we send over the Google form, so that way we can at least, if there are issues or anything like that with the applications or whatever, we can link it back to the Google form, and then just be able to reach out to you guys directly to get everything handled. So path of least resistance there. So yeah, all good.
All right, DZ said he's going to join us, so everyone in the stream, they know who DZ is. He's been with us for a while, so
awesome.
Yeah. All right, so that's in there. That's been announced. There we go. So yeah. All right. So let's see if we can get. It says we have 3 minutes left, so I may just end it here and just restart if that's okay with you guys.
Sure.
Okay. Let me just do that real quick. And I think there's some stuff on this the YouTube you can read over while I get this going. All right. Here we go. Okay, so I'm still here. I'm just starting a new meeting, and we're going to add DZ in here. So hopefully you guys can still hear me. Okay. And let me go ahead and add so get these guys back in here. And let me get... You heard Anon. Moo. All right, let me get DZ in here. I haven't talked to him in months. Let's find out how Texas was. You guys excited for DZ? I'm excited. All right, so let me get him in here. Okay. So let's see if we can get these guys in here. And I will allow screen sharing for everyone. I know, right? Look at me figuring out stuff. We were able to actually get this thing online and keep going. And there's DZ.
What's up?
Hey.
How you doing?
I'm good, man. It's been a while.
I know, yeah. It's field season for us here at the Weather Center.
Yeah, and there's Alec. What's up, dude?
All right, yeah. I'll turn my video on here. Y'all can. Y'all get my profile anyways here, so I don't particularly care.
No, you're good, man.
Yeah. So Texas is great. I tried to stay in touch where I could. I know I still have a bajillion DMs I'm still trying to work through like individually. So yeah, I apologize, but I've been trying to keep most of my efforts to just the single channel and try to talk when I can.
DZ, good to meet you.
Yeah, likewise, Alec. Yeah.
So Alec is the CEO of Optionality, and I thought you might actually have an interest in this because he's been they basically put out a product that basically does the debit spreads, call and puts, and they basically are simplifying it for the average like newer investor.
Okay. Interesting. Yeah. So yeah, I've only been listening for the last 5 to 10 minutes, I guess. So I know you probably gave a big presentation on this already, but if you want to give the quick rundown here, I'm interested to hear what this is.
Yeah, of course. So essentially, so Adam, who's the other co-founder, he was on. I don't think he's on now. But it was back in sort of 2020. We, I've always been the finance guy in my friend group. So, we saw kind of a bunch of people in our friend group start to trade options and really start to have trouble. Not only with like not sure what trading platform to use or how to do it, but like then when they were putting stuff on, like sort of getting hosed or like putting too much money, not really paying attention to risk, that sort of thing. Mm-hmm. Really try to come up with a solution kind of from the ground up of like, all right, not only are there sort of like market factors that are going on like outside of maybe what they should be, but I think just from a very base understanding perspective, right? Like it's just a hard thing to get into, right? Like options are not easy. And while ultimately I think they are the best mechanism to essentially be short-term, trading stocks and, betting on stocks for lack of a better term, I think if you don't know what you're doing and you're trying to do it yourself, that's not a good recipe. And so we essentially tried to create a medium where, let's create a safe environment where it's transparent, it's accessible. You're not putting in hundreds or thousands of dollars, on a single trade, right? You can do it very accessibly, but where you also understand exactly what's going on. And so that's really the genesis of Optionality. What we have now, we're a full service brokerage in terms of, a fully registered FINRA and SEC broker dealer. And we have a mobile trading platform that does debit spreads and both on the call side and put side. We actually have an algorithm that translates the options chain into a menu. And so essentially a menu of option spreads that are grouped by risk and grouped by expiration. Okay. It's just a much better workflow. It's a lot easier and you're still able to trade sort of a complex option strategy. Yeah, so that's sort of the genesis behind it. And, we just launched like a couple weeks ago, really. We did like a closed beta and that went really well. We got really good feedback. So we're new in the market. So really like we're at that stage of just trying to collect feedback, like see what people like, see what people don't like. We're still kind of young enough and early enough where, we are very nimble. We can sort of like shift and mold with feedback. So we're just sort of in that place right now and really wanting to collect as much feedback and people as possible to help us grow.
Yeah, no, that sounds, that's definitely a fantastic endeavor, I would say, because it takes a really long time to not just learn stocks, frankly, but, options, how they drive the market. And really, I think like they, at least at this stage of the game, like, with how, the markets have been lately, it's like you look at max pain, you look at where positive or negative gamma is in the market, especially in the major indices, you can say, well, chances are it's going to land within $1 or $2 of that, every 2 days or 3 days, depending on when the OPEX is. So, so then it's like, if you have that piece of information and, if you want, low risk strategies, like I do a fair amount of spreads myself, just because like the upside return, on some of them, like, if you're doing like 380, 385 credit spreads on SPY, for example, you can enter those for $20-$30, depending on how close you are to the expiration, but have exposure up to $500 or $600 on, potential, money back. So,
and you're still getting that kind of like, you're getting that really kind of fair break even point, right? And so that's sort of what I was explaining earlier is like the upside that you would get from a single call or a single put is very rarely ever seen through, right? Like you would almost always, not always, but almost always be better off with a spread where you're sort of subsidizing your position, you're lowering your break-even point substantially, and you're still able to, yes, your upside is technically capped, but like, again, it's just sort of like that trade-off between having that lower break-even point versus having the upside exposure. Like you're going to win to that lower break-even point much more than you would win to having an uncapped exposure.
Yeah, exactly. Yeah, I definitely like those too. And I think, just from just a psychological standpoint too, I know, one thing I think that I talk to people a lot about is like, if they own, several hundred or several thousand of a stock, one way to monetize your stock is to sell covered calls sometimes.
Yeah.
Like, some people are very hesitant to do that. Like I have a friend who has several hundred shares of Tesla, for example, and he's been collecting those for years and years, so he's been buying them since they were $40 a share. So, but he's like, I know that, the market's not doing so well, but to sell even like a call that's like at $1,000 a month, like you could make a couple $1,000, and then just from the volatility and the theta decay on those.
Yeah,
he
sure.
can,
especially something like Tesla.
Yeah, so like you can make a killing on that, but he doesn't do that because he's like, well, what if it goes up suddenly? You lose the shares, and I'm sure there's a number of ATER investors, that can relate to that too. They're like, I don't want to quite do that, but on the other hand, though, if you're thinking, like kind of right now where we're kind of in this range bound, 250 plus minus 15 cents in either direction, like if people wanted to. They see Aterian, at 230, for example, in a week or two, and they're like, I want to play the, 250 to 3 spread, like you get, that's a $50 range, and that would probably only cost you what, like, $10-15 to enter. So that's up to, that's a 3-to-1 upside potential there. And we all know that it's going to be worth over $3, like in the, not so distant future, I would think, But just little things like that. I can think about just being, better for the average person, to make some money, but without having to really touch their shares.
Yeah, no, absolutely.
And I think that's quite important to most retail investors, who just want to hold their stock and really, see that it grows into something that they can cash out at some point and do good for their families.
Yeah, and that's sort of like, that's a sort of a driving force behind what we're doing, especially as it relates to options, is that there are so many the options are like the Swiss Army knife, right? Like there are so many ways that they can be used. There's so many different things you can do with them. But unfortunately, the barriers to entry, the hurdle to get, to get comfortable with being able to use them in a lot of different ways is very high, right? It's not something you can casually go in and do, or else you're going to get crushed. And we kind of see an issue with that, right? Like there's no reason that like everyone shouldn't be able to use these things. And so trying to bridge that gap is sort of inherent in what we're trying to do. And I think you're exactly right with like, there's a bunch of different scenarios where you can be able to use options effectively.
Yeah. Yeah, and I think to the average person too, I think a lot of people, like they invest, thinking, 5, 10, 15 years down the road, but there's so many people that I can think of, that even with, a decent income, that, with how bad inflation is right now and with kind of what's going on in the economy, like almost everybody's looking for kind of a second passive source of income. And options are certainly one avenue to do that. It's like, if you're, privileged, to have several thousands of shares of a company that just so happens to have a very high trading range, where you can mine the volatility, sell deep out of the money covered calls and make a couple extra $100 a week or so, great for you, but that's not, not everybody can do that necessarily. So so a tool, I guess, that you're explaining here is that, you look at, debit and credit spreads, and then you can see, kind of the risk reward, for each one. I think that's doing a lot of good service, I think, to the, typical retail investor.
Yes, especially from a comparative aspect. You know what I mean? Like being able to have 9 different spreads per expiration to then be able to say, really see what your choices are. Like, oh, okay, well, I can move up in the risk spectrum, and I'm going to be long volatility. I'm going to be long data here, but like that's a $10 to $90 risk reward. Like, is that worth it, or do I want to stay on the short side of that? And maybe it's $60 to make 40, but I don't want to step out and risk that much. And so it's just giving people like showing people a better picture. And, we always think that will lead to better outcomes.
Yeah, it's great stuff. Yeah, it's good. How do I guess just a question about your product, and like what's like the pricing, and how do you sign up for like the platform, I guess, and all that?
Yeah, so the platform is free for anyone to sign up, and then the pricing is 50 cents per contract, essentially a flat rate, and then we pay, like the SEC fees, the ORF fees, the TAF fees, like all those sort of like little option fees that come along with it. We kind of just take care of those, just because, again, they sort of like, they're not really meaningful, right? They probably add up to 6 or 7 cents per contract. But they're just a little confusing, right? They're just like, what are all these little fees that are being charged? And I think what we've seen from people is just confusion about like, we've actually seen some brokerages add on to those. Again, like a couple cents, which is just sort of like, I don't know, weird to us. But the reason that we have a commission versus a zero commission model is because we didn't want to be hinged to payment for order flow. So full transparency, we do get a split of payment for order flow from Apex. But, we've sort of done a rigorous like testing and DD of their payment for order flow process. And, they have 9 different market makers and hedge funds that they use, and they're not shopping anything on the basis of, like highest fees getting paid. Like they do everything based on liquidity and based on fill. And then we're sort of a step removed from that. If it went away, like it's not a major part of our business model. And so it's just not really that big of a deal to us. We wanted to make it more user facing so that like people know what they're getting, and like, that's sort of the main driver of revenue versus, being fully reliant on having relationships with market makers.
Yeah, absolutely. Yeah. And I'd certainly think, especially when you're dealing with options. And I think this is another thing that retail tends to step into the trap of, is that, they think of, let's say the stock starts moving up like ATER, like we start, moving from, $2 to $3 to $4. A ton of people are going to go in and say, I'm going to buy and hold my $2 in the money calls or my $3 in the money calls, and I'm going to exercise them. And, if you can get them cheaply, absolutely. But,
once that
people
IV spikes.
Or sorry? Yeah.
Once that IV spikes, then all of a sudden it's not so
cheap.
Yeah, it's not as cheap, but people need to remember, I think, make money too. And then, but if you're, using stock, like, you want to know that your stock's going to like IEX or, something that's actually going to move the price. Whereas on options, it's like, I think of it strictly as, a paycheck, and I wouldn't think that payment for order flow is going to be like a make or break thing for a lot of, the contract makers or the market makers, I guess, if they're routing, the contracts onto the market. So
and that's actually the interesting thing that was actually part of my educate. I learning the differences between payment for order flow structure on the option side and equity side. Like I actually think that options have a healthier payment for order flow structure versus equities. Okay. Because equities, like they have dark pools, they have internalization. I don't know what the latest things are, but I think it's like 60% of all equities are done off exchange.
It's like 90.
Yeah, like that's great. Like that's insane. Yeah. Versus options, they all have to be done on exchange. Like there are no dark pools for options. There is no internalization for options. That's all on exchange. So there still is payment for order flow, but it's still going to an exchange. And that's not to say that there's not still issues with the system, but it's not the same as equities. It's not as broken as equities. I think the equity structure is really
It needs work.
it's really unhealthy, I think. Yeah.
When you guys actually talked to IEX, right? Like after I talked to you, you actually like went in.
We had a couple calls with IEX. Yeah, I mean, as we're looking into sort of expanding our offering, and I did see there was a question about this. As we're looking to get into some more product lines and looking to expand into equities. Yeah, I think if we do that, if we make that move, like we want it to be with IEX. So yeah, I've had a couple calls with them just about what the integration would look like and sort of about what that market structure and their market plumbing looks like. I mean, it's light years above kind of where other exchanges are. And the thing I love about IEX is they have this midpoint product, which is essentially they have like orders that get pegged to the midpoint. So if people want a fill at just a fair price, like their orders actually move with the midpoint, which I think is really cool.
Oh yeah. That's really nice actually, because I notice, when I try to make, credit spreads, for example, like, I almost always have to price it, to where it's like I'm basically paying for like the, the lowest ask and the highest bid and, basically, having to go with the max, because if you do even like 1 or 2 cents and, the opposite direction, like it can almost like never fill sometimes, especially on Robinhood or Webull for that matter, the two that I use mainly.
Yeah, it's tough when you're, when you're trying to price things at the midpoint with spreads, like that is the fair price. And we believe that that's the fair price. We don't think that there should be, I think it's tough when you're trying to cross the spread in both open and closing. Like that's really tough. And so, we default to everything limit order at the midpoint. But like, it is tough if you just want to get something done. Like if it moves a little bit, right? Like some people don't want to just stay on their phone and like stay like, moving their limit price. And so, we've been trying to think through things like sort of doing that ourselves, right? Like automated, orders that kind of move with where that midpoint is so that people aren't having to be like constantly making changes. But the fact that IEX, and IEX is only equities, but the fact that they do that as an order type, like I've never heard of that before. And I think that's like super interesting. I think that's really cool.
I'm just going to bring something over real quick so you guys can see on the stream.
Sure.
So, like, this is just an example, but like Redbox, they were the ones that got the options shut off on them, if you guys remember.
Mm-hmm. Oh, yeah.
All right. So, but look at like their volume, right? Look what went off exchange today. 63% of the daily volume went off exchange.
Yeah.
And that average over the 30-day is 60.
No, that's like close to market average.
And look at this. IEX. That's it. So this would have actually hit if people were ordering through that, but people aren't. Like, I just, that would be nice for retail to actually have their stuff hit a lit exchange and actually affect. Like, when you buy a stock, you actually see that stock move based off of, your orders actually hit the market.
Yeah, no, I agree. And like, I think it's a great start. My 2 cents is that I think until we have like much higher market participation on lit exchanges to the fact where it's, upwards of 90, 95, like that's when you're really going to see spreads start to tighten. That's when like, the sort of like false price improvement that people quote, right? It's like you're getting a 30% discount on something that was marked up 40%, right? It's like you're still not getting a good deal, right? Like if everyone was on lit exchanges, you wouldn't need price improvement. You'd just be getting a better price. So, I think it's definitely a good start what IEX is doing, but, until there's some sort of wider mandate where, more of that market participation is done on these exchanges, I think there's still going to be issues with the equity market.
Like, this is what we've been talking about for like months.
Yeah. Yeah, it's wild.
Banging our heads against the wall.
Yeah, it's crazy. It's like a different world.
Mm-hmm.
So I don't know if you know this, Andrew, but I was going to say, Alec, your background, you worked for Susquehanna, right?
Yeah, I was at Susquehanna for 4 years, spent some time on their stock loan desk, spent some time kind of bouncing around, was on the commodities desk for a little bit, was on the index options desk for a little bit, and then did a couple private family offices after that, so single family office, and then like a more like an RIA function. But yeah, was at Susquehanna for 4 years.
Oh wow.
So I figured it'd be good to talk to somebody that is on the other side, or was on the other side prior to them starting this company. So
yeah. And I was not on the market making side myself. I was not on the like high frequency trading side myself. I was more on the operations side myself, but like I did get to see a lot of that stuff sort of secondhand. I did P&L for a couple of the strategies. I was pretty front and center for a lot of the stock loan stuff we did, but I wasn't like a market maker myself or anything like that. Interesting. I mean, those guys are actually like the smartest people in the room. Like, it's insane. Some of the people that walk around that building, like, I don't think like understand what's going on in reality other than what's happening like in the trading world. And they are like the smartest people I've ever seen in my life when it comes to that. And then they like can't hold a conversation with anyone else. It's crazy. It's like the craziest thing I've ever seen. People would literally walk around, some of the quants walk around with their like zippers undone, belts unbuckled, literally looking like zombies. And then they'll like sit down and they'll code for like 6 hours. It's like crazy. It's like unbelievable to watch.
Mm-hmm. Yeah, it's wild. And like, yeah, one thing I've been trying to study up a lot over the past couple months is just the role of these high frequency trading bots and the role of, just price controlling, like stocks and equities just across the market, and how just efficient these machines are at hitting prices or stock prices to certain levels, and and then also using options delta and gamma to figure out like where the price is going to move over a day or two or over even the next week for that matter, and just how efficient they are with getting trades down to the penny or even fractions of a penny.
Yeah, no, and I honestly don't have the inside look on that in terms of like specific stuff, specific strategies. What I can say is like super efficient. Like they're really good at that stuff, and they have people that like nail all of that stuff. Like they know what they're doing. They know exactly what they're doing when it comes to price controlling and when it comes to like a lot of these bots and a lot of the algos that kick in. Like it is as much of a science as it could be. But unfortunately, I was never quite that smart to be on that side of things. Those people were a different breed. It's crazy.
Yeah. Well, yeah, I can say that. So I'm a research scientist here at the University of Oklahoma. I have my master's and PhD in atmospheric science and meteorology. So
awesome.
One thing I find pretty fascinating about the world of stocks, compared to the world of, meteorology is just like how like Fibonacci numbers, they're across those and like wave equations, like figuring out, like connecting one point to another and then just figuring out how something's going to move. Yeah. Like waves are a big deal. They govern, our climate models, our weather models, even our cloud physics models.
That's super interesting. Fib levels are something where if I had a shred of more time on my hands, like I would love to sort of get a little bit more in depth on Fib levels. What's really interesting though? So Susquehanna, so they trade like commodities. Obviously, they trade a ton of different, commodity products. They have a meteorologist on staff.
Neat.
To sort of do like different types of weather predictions, and he's sort of like a big source of a lot of those big commodities trades that they do. They have like a team. Yeah, they have like a head meteorologist, and then they have like a team of sort of analysts.
Interesting. Yeah. I know. At least in meteorology, a lot of the students here that graduate from Oklahoma and then from Wisconsin and Penn State, which is where I did my other 2 degrees.
Oh, cool.
They have a lot of people that go into like the insurance industry. Like they work for Progressive, they work for Chegg. They get paid a ton of money because like if their weather predictions are right, they can save both the company and their customers. A significant amount of premium, just by, if it's going to be dry versus severe, for an increased period of time, like, they can just get a better pricing model, for their products, and they just basically get paid the difference, or a small part of that, and the rest, of course, goes to the company and their R&D and all that.
That's cool.
Yeah. So there's a lot of overlap, but with I always think of these, these fib levels though. It's like one of the things that we learn, like every meteorologist learns in fundamental dynamics classes, like shallow water waves. So if you imagine like a still pool of water, and I take a giant like boulder and I throw it in the river or the pond, you're going to see really giant ripples. But then, someone else takes, a couple stones, and throws them in there too, you're going to get other waves, but the waves actually interact with each other. And it's kind of a way to think about, fractals and, fib levels, because, everything trades within ranges of each other. It's like if you look at price action on like a 2-minute level or 5-minute level, you can kind of see where it's going to go on a, hour to hour, minute by minute basis. And then of course, there's the bigger waves, where it's like, the stock reaches a bottom here. Here's when the expected PR is, is it 8 days, 13 days, 21 days, does it fill within like one of the Fibonacci like outliers, into the future, and, how many fractals can you put in together there to make the predicted price movement or so? Yeah. So that's one thing I'm continuing to work on. And, I've, studying ATER for a long time, like up until the last couple of weeks, it's felt like what was I going to say here? Yeah, like the same bot that I guess probably, owns and shorts, ATER, that like, using one of the high frequency bots, like they've run the same algorithm between like late March through a couple of weeks ago. I have no idea what it's doing right now, just based on, the fact that all this bad news is coming out in the market and volatility just seems to be going down and down and down. And
we were talking about UVXY today.
Yeah. Yeah, it's like, I'm looking at that and I'm like, this is a better price than puts right now, because like, it's like the Chinese military circling the Taiwan Straits, today, like, the State Department sent out a memo saying like, hey, like American citizens, everybody needs to get out of Europe or Ukraine, including the ones at the embassy. Like the euro is less than the United States dollar right now. And it's like, and volatility is only at 20, or VIX is 26 right now. It's like, that's a goddamn steal. Like, seriously.
I sent that article over that they've gotten in trouble for manipulating the VIX, because obviously they can control derivative prices because of that.
Mm-hmm.
Because the VIX is just derived from basically the amount of puts, right?
Mm-hmm.
It's the fear index. But like they can manipulate those numbers to make things, cheaper or more expensive when they want them to be.
Yeah, exactly. And it's like, like one of the big risks I kind of see coming on the market right now is, they're making volatility so low that it's like, even like decently like in the money options. It's like I was looking at, puts earlier, like when, knock on wood, we get another short squeeze today, and I'm looking to re-enter some 375s or 380s, for next month or so. And I'm like, I can enter a 375 for like $700. It's like, what? That's a ginormous deal, because like, if the SPY goes down, 20, 25 points, like if something if shit really does hit the fan, it's like, it's going to be under that. And it's like, that's 1,500 to 2,000, that you're going to add on, like, every dollar moves down, your deltas are up to 0.6, 0.7 or so. So it's like, you're getting really massive returns. So I think people are going to look at that and say like, well, IV's not priced in, therefore they're cheap. Therefore, when a real panic event sets in, there's just going to be mass FOMO buying into these. And then the market makers, of course, are going to have to hedge by just shorting and shorting and shorting. So it's just going to make a big snowball effect, I think, into, basically to the downside, where it's like people can't sell fast enough, to catch up with the put gamma that's accumulating at lower and lower strikes. Yeah. And the only way that you're going to stop that buying is for volatility to go through the roof, to actually price that in. That's what I think is going to happen anyways, like when something actually does trigger a real sell-off.
Well, yeah, I mean, honestly, I don't know if it's going to be a piece of news. Just like you said, there's been a lot of not great stuff coming out recently that hasn't seemed to do the trick. So,
yeah, I don't know. Yeah.
Just going to put a 2-point rate hike and then
yeah.
Just throw everybody off. Be like, well, we analyzed the numbers and now we're going to do like 1.5 and everyone freak out.
Yeah. Well, I don't know. Well, yeah, we got that hot CPI number yesterday and everyone's like, oh my God, 100-point hike, and it still almost went green yesterday.
Yeah. Well, I mean, look at the end of today. They're like, well, may have to, pull back to. I'm like, guys, everything's on fire.
Yeah. It's like everybody just wants a reason to buy, but I don't know if it's just so much people buying as it is just, someone with big money that's actually just closing short positions, creating the illusion of,
Right.
people FOMO buying. And then it's like, if you watch 2-minute or 5-minute ticks on the SPY, it's like, it's going up. And then the second it reaches a critical fib level, it's like, oh, here's 800,000 shares that appeared out of nowhere, and they, stealthily distribute that. It's like when ATER squeezed to 20, back in October, and then 48, it's like, when you saw the ADL and the OBX diverge, that's kind of what happens at the top of these ticks here. It's like somebody's selling with the strength here, but it's looking like a giant green erect candle.
Yep.
Because, they want to
Make it look because they're slapping the ask.
Yeah, retail slaps the ask while institutions are distributing, and they've been doing that for the better part of 2 weeks. Because I think they see what's going on, and they're like, "We want to get out." ASAP.
We want to get out. Yeah. You know what's really interesting, and I am going to have to run here in a second, but the big sell off we had was there one in early May? I think there was one in early May where it was I don't know, it was a 3 or 4 percentage points in a day, in a day or two. It was one of the days or one of the weeks where we had one of the biggest sell-offs in
which ticker?
The market.
Okay,
Just in general.
we just pulled up the SPY.
It was if you look at SPY, I think it was May 6th or 7th, I want to say.
Okay, let's go back.
I just remember seeing, and this is just, this isn't anything in general. This is sort of just a general comment. It was some of the most controlled selling I've ever seen.
So right here is May 5th.
Okay.
And then this one was a doji. But
yeah, so
was it maybe this one, the 5th?
The 5th, yeah. I think that's...
And this one was a doji.
I just remember watching the 5th.
And this one, the 5th. The 5th, yeah. I think that's... And this one was a doji.
I'm hearing
I just
some,
remember watching
the 5th.
And this one, the 5th. The 5th, yeah. I think that's... And this one was a doji.
There we go.
Are we good now?
Yeah, sorry. Yeah, that was me. I refreshed my computer.
No, you're fine.
Yeah. But yeah, go ahead. I was looking at
Yeah, so maybe it was I don't know, maybe the 5th or 6th. Anyway, I remember watching the selling action. I was just watching it all day, and it was just the most controlled. It was a perfect pattern of bear flags and then rug pulls and then bear flags and then rug pulls, literally for the whole day. And I remember thinking this can't just keep happening this way. And it was the most
doing it.
It was ridiculous. I've never seen anything like that. It was uniform throughout the entire day of just controlled selling.
Mm-hmm.
I don't know. Not that that's anything of note, but anyway, Anon, DZ, it was great to meet you, Anon. Thanks for having us on again. Everyone for listening, thank you so much. We appreciate the feedback. But yeah, this was great. We'll do it again. And excited to see some feedback on the app for people that are getting on. And thanks for the time, everyone.
Yeah, likewise. Yeah, I'll definitely. I'm planning to download it soon. And I pretty much 99% of my trading is entirely in options, except for, of course, the few ATER shares that I have.
Yeah.
So,
that's awesome.
I'll be excited. To put a little bit of money there and I'll just pilot it if anything. I'll plan to use it in that regard and plan to send feedback.
That's awesome. No, the feedback is the most important. So thanks, everyone, and have a great night.
Hey, Alec, thanks for coming on.
Of course.
Yep. All right.
See ya.
All right, DZ, man, what's going on? Tell me about Texas.
Yeah, Texas. Yeah, so we had our Escape Fuel campaign. So we were myself and Professor Eric Bruning from Texas Tech University. We were co-forecasting leads for the operation. So we work from on flight days. It would be from 4 a.m. till about 6 to 8 p.m. on most of the flight days there, where we get together, we make a forecast, we brief the pilots in the morning, and then when they go in the air, we just watch their aircraft motion on satellite and radar, and just kind of told them what thunderstorms to go penetrate, and go measure the sea breeze, go measure some of the pollution from the refineries, and then try to get that in the vicinity of some of the clouds that were forming nearby. Because one of the big things in climate models that are just total dog shit right now is the aerosols and clouds are not that well like represented, like when they have to interact with each other. Like in some parts of the globe, like, you know, aerosol cloud interactions will give you a positive warming effect, but other simulations will give you a negative one. There's a huge divergence of that in the IPCC models. So one of the things that we have to do, because a lot of, you know, coastal cities, especially in the tropical regions, like, you know, Houston, India, coastal China, Taiwan, even Japan to a small degree, you know, they all have, you know, big population centers, so they're more prone to, you know, higher emissions there, and they get, you know, these sea breeze thunderstorms during the summertime or late spring, I guess, too. So collecting these data sets here, you know, to figure out, okay, you know, like what are the actual measurements here, you know, and we can, you know, of course, like directly quantify that, and then we can kind of pick which models are doing good and which models are doing not so good,
and then
kind of
tweak things from there.
Yeah, tweak things from there, yeah, and then just kind of get a better consensus, I guess. But, you know, those are going to be like 5 to 10 year projects, though. You know, by the time like we get, you know, some, you know, people who can get into the guts of the code and actually program the, you know, the wave equations, the radiative transfer codes, and, you know, figure out, you know, how to do that. But yeah, it's an incomplete science, but you know, it's a worthwhile one. You know, it's
that's
a lot of
really
fun,
cool, though, right?
Yeah, oh yeah, it's a lot of fun. I find it fun too, and it's always fun to work with aircraft pilots too. Like, yeah, the guys that we had were from Canada. Actually, they were very, very blunt, very, you know, well, we'll work 7 days in a row if we need to. You know, give them some Labots and, you know, talk hockey with them. And
oh, that's right. You're a Penguins fan, though, right?
I'm a huge Penguins fan. Yeah. Yeah, Pittsburghese. Yeah. Yeah, we got Crosby and Malkin for a few more years, which I'm excited about. So.
Goat says, I understood some of the words that DC just said.
Oh. Yeah.
And D wants to talk some ATER. You got a little bit more time, or you want to...
Yeah, I can, maybe... Yeah,
pour yourself one more drink and...
Yeah. Yeah, I think...
was that a White Russian, or...
It's Fairlight.
Chocolate milk.
Yeah.
I wasn't sure. I saw something cloudy. I was like, all right, well.
Yeah. No, I chug that stuff. It's delicious.
Oh, no. We actually have the same one for my daughter.
Nice, yeah.
Is that the Wayfair, or was something Fair? What's it called? It's
Fairlight.
Yeah.
Yeah, it's good stuff. Yeah, it's not like some of the chocolate milks that they make are just like, they're super sweet, and you know,
that one's creamy and good.
That one's creamy. Yeah. It's crack. It's simply crack.
All right, so we got like 3 minutes left on the free version. What I'm going to do is I'm going to go ahead and cancel this meeting and then start one more new one, and we'll do that to the night.
Yeah, sounds good. Yeah, I'll take about 60 seconds here. I'm going to go fill myself up some water, actually, and then I'll hop back on here.
Okay,
so
sounds good.
All right.
D said it's for kids for all ages.
It's for all ages, yeah.
All right, I'll send you the link, all right?
Sounds good. We'll talk in a minute.
Okay.
Yeah.
All right, guys. You guys good with talking to DZ about ATER for a little bit? Okay. Hopefully this is keeping some people's attention. I know this wasn't exactly the normal, like, going over stock stuff, but, you know, we're talking more market stuff and, you know, kind of getting some different opinions, and I think this was just it's a nice break from what we normally do. Like, you know, we can always go over tickers during the day. Also, if you just send me a DM, we can start doing that. I think some of you sent me over some things to look at. Let me go ahead and put up a new Zoom thing real quick so we can get DZ back on it. Yeah, DZ's a smart dude, so we want to talk to him. All right, host. All right, here we go, and let me get the participants copy link, and let me send it off to DZ real quick. All right, there we go. I'm going to let him share his screen too, so let me get that going too. Yeah, actually, that's what I use too. The Gillette Fusion 5. That's my favorite razor as well, DZ. I just DM'd you the new link if you want to join in, DZ. All right. What do you want to look at? You want to look at DZ should join us in a second, but in the meantime, if you just want to pull up Fife real quick. Yeah, I mean, I told you guys, the warrants are 1150. It's probably going to run to 1150 to unlock those warrants. Like,
All right, I'm back.
oh, good. All right. So, do you want to share your... Oh, look at that.
Yeah, I got my Motley Crue background.
That's awesome.
Mhm.
All right, so I think I allowed you to share your screen if you want to do that, if you want to cover anything on ATER, what you've been seeing, or...
Yeah, give me, well, I don't know. I need to go back to my computer, pull up the links here. Let me grab, let's see here. Yeah, let me get a Weeble and let me pull up Trading View here.
Sure. What's up, Carl? How are you?
Oh my God, y'all see this? China's GDP reported only 0.4%.
Wow.
Wow, Jesus, that's a bad miss.
That's, what was it estimated for?
A 1.2.
Oof.
That's, oh my God.
Don't worry, nothing to see here.
Mm-mm.
The world's doing just fine.
Buy the dip. It's what everybody's doing these days. It's like blah 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 blah. Thankfully, like, there's a reason I'm long ATER and short just about everything else. It's because, at least until we get this next set of warrants here, like, ATER literally, like, it has a very well-known floor at this point. Yeah, sorry. I had
No, you're good.
Kinda...
The one thing I learned from Alec the other day, though, was I was like, okay, so how do we get out of how do these hedge funds and these shorts get out of these positions?
Mm-hmm.
And it was interesting because he was like, oh, well, we apply for Rule 144, and then if that, that gives us another 35 days of exemption. And I'm like, wait, what?
Oh, wow. So they just keep punting it, basically.
Yeah. So, like, in the case of Ethereum, like, obviously, like, I was like, okay, so these guys are on reg show for 29 straight days. Something should be happening soon.
Mm-hmm.
Well, you go I think it's the 14 days or 13 days, whatever the number is that you're supposed to be on reg show, 12 days, whatever it is. They can apply for an extension on top of that for another 35 days.
Wow.
And I was like, no one ever told me any of this stuff. Like, but like, that was fascinating to hear from Smart Money where he's like, yeah, you just apply for this thing. I'm like, well, now we know, what these guys are doing, because apparently that's the way the Overstock was able to get through all these loopholes, because Overstock.com, if you remember, was on the reg show list for 666 straight days.
Wow.
And it was because they found all these different loopholes in the system. So
then when they finally did have to cover, it was just like...
Well, they only had to cover because they issued that the crypto NFT, or not a crypto dividend, and because shorts couldn't actually produce that because it was only specifically through the company, that basically it made the shorts cover. So if you actually, just for fun, if you wanted to pull up Overstock.
Yeah, I think I have my screen here. What's it's OSTK?
OST, I think it's OST.
Yeah, Overstock.com Incorporated.
Yep. And so if you actually go back in the history of them, where they actually had to cover.
We'll just go to their weekly chart here.
It'll be quite evident when you see it.
Yeah, I'm going to guess it's right about here somewhere.
Yeah, but they've been beat down for all that time, and then when they... Actually, I think it's even further back than that, wasn't it?
This is, September 20.
How far back can you go? Can you, zoom out more?
Yeah, I can zoom out, yeah. Well,
yeah.
Were they doing crypto dividends all the way back to...
Yeah. But I think... I think that part right there was where they issued the crypto dividend, maybe. Or one of these, whatever it's parabolic, that's when they had to close it. Maybe it was this one.
Yeah, because there's two on here. So the top tool. So this is obviously the price, and this is the Wyckoff Sniper tool, which is
Gotcha.
It's just basically a conglomeration of several like EMAs, like 1321 and then 50.
Gotcha. Okay, so it's this one right here. This one right here.
This one here.
Well, whatever one went parabolic, but basically, like
this looks like the 20s. I don't know. I think the early, kind of after COVID here. Well, I don't know. A lot of stocks went parabolic though after COVID, but I'd probably say it's probably June or July here where, it looks like it was $14, $15, and then it went up to $78.
Yeah.
It looks like.
So I think apparently they basically made some sort of like crypto dividend that the shorts couldn't do, and then the shorts sued them, arguing it wasn't part of their core business, so they were doing it just to basically screw shorts. It's like the burglar that breaks in your house and then sues you for getting hurt in your house.
Yeah. It's special.
That's kind of how I equate that. But it's like the people that were shorting them into the dirt, basically they got sick of it and they issued a crypto dividend, and then it.
I'm gonna guess it was actually here like during COVID, because it looks like they got all the way down to, I saw $4 down here somewhere at some point, and then let's see here, and then within a period of a couple months they went all the way up to $121 or so. So going from $2 to $121, that's
it was April 27th, 2020.
Yeah, Jesus Christ, yeah. That's just absolutely incredible.
Like, isn't that nuts?
Yeah.
But I mean,
yeah. I tell you what, though, but when something squeezes like that, it's like if you're the company, and you were like teetering, on liquidity issues or bankruptcy potentially, depending on your money, it's like, if you get a stock all the way up to, $100, $150, and you have like authorized shares to use, it's like, people want to buy, at $50 to $100, like that keeps the company in business for another, 3, 5, 10 years or so.
Well, look at GameStop.
GameStop, they've done a lot, since, they had their historic squeeze too. It's like, they've delivered their NFT marketplace, and looks like there's, I know a couple people that have used it, and they said it's extremely easy to do some pretty fun
I don't know what I'm doing with technology, and I actually went on there and bought some stuff.
Nice. Yeah. And they're going to be one of the first ones in that space too, if I'm not mistaken.
Yeah, OpenSeas is the big one right now, but from what I saw, just for fun, I'll show you this.
Yeah. You want me to give you this screen back, or?
I think I'm actually superseding you because I'm streaming it on my screen.
Okay.
Yeah, I think so. We're okay, but basically, I don't know if you can see the stream on. Are you looking at the stream at all? Muted or?
Yeah, I think. Well, I'll stop my share here for just a second, and I'll go to the computer here.
Okay.
Okay. Yep, I see you now.
Yeah, so I just thought this was interesting though, because you've got your creators. I always thought this stuff was silly, but I actually went out and I actually bought stuff. There was one that I thought was pretty cool. I think it was this creator Jules, right?
Mm-hmm.
So I went on their stuff, and this was totally my style, which is this particular one, right? So look at some of this stuff. That's art.
Yeah,
that's legit. Look at this one.
Mm-hmm.
This one's called Fall of an Empire. Totally up my alley. But to me,
wow.
this is actual art. I think this one's pretty cool. And I've noticed these values keep going up because I think this artist is getting discovered.
Mm-hmm.
And so that's a new piece, I think. But I've noticed the values all are going up on these things. Look at some of these. That's $1,100 now.
Yeah, I noticed. Yeah, it's all in Ethereum price as well.
Yeah, so
and that's
I bought this piece for like, I think, I don't know, like $30, and now it's like, or maybe it was like $60, but now it's like 150 is the lowest, because you go here, you go to buy, like it doesn't show you when you don't have it signed in. But basically you go there and it shows you the different, there's 16 people that are willing to part with it. And the lowest price is 150, but some people are like 300. So it's interesting. I thought this, but where I think they're going to make their money is in this part, which is they've got these Web3 games that are going to be all sitting there in their marketplace. All the transactions go through them. So every time you buy a pack, every time you transact anything, they're getting 2.5% of each sale.
Wow.
So do that for all these new games that they're going to be putting out on this thing, and you all of a sudden have a revenue stream that wasn't there before. And if they can get more developers onto this thing, that might actually be super interesting down the line. So, yeah, I mean, I think they might actually be onto something here. I it's still beta, but I just thought that was,
Yeah, exactly. Yeah, I mean, obviously, the whole, Ethereum and Bitcoin space is going to be huge, in, the next, 10, 20, probably for, the rest of human existence, I would probably think, because, I think that's where currencies are going to be headed to. And the fact that GameStop is kind of getting on the ball with this now, they're going to be making a lot of Ethereum, I think, off of these transactions. And, once this market finally does recover, like, they're going to have this huge stockpile of Ethereum. I don't know if they're going to do Bitcoin in these transactions per se, but like when that starts going up, that's also going to like really boost the value of the company.
Yeah.
And that's just going to bring people in, because as more people hear about the NFT marketplace and they get excited about it, they're going to want a piece of that pie too. So I could see GameStop realistically having two squeezes. One, with this whole split dividend thing, that they're about to have, and then, maybe when Bitcoin gets back to $60,000, $70,000 a coin or so, and
Ethereum's 200 or 2,000 again, and yeah.
Well, so like,
I think it's fascinating though to think. The one thing I was thinking about, what's the biggest like bridge that, like the hurdle that NFTs and stuff like that have is massive acceptance of it, right? Like most people don't know how it works. They don't have a wallet. They don't know how any of this stuff works. But like they're making it pretty simple. Like I was able to go on, create a wallet, fund it, and then buy some stuff. And like I'm not tech savvy. Like it took me forever even to figure out how to like do this without making the echo.
Well,
yeah, but I think there's something to that. So, but yeah, let's go over your what your notes are for Ethereum.
Yeah. So I think I don't have any on here because I just
That's fine.
Here. Okay, there we go. Now
there we go.
Yeah, that is ES Futures. I want ATER. Okay, so I was I think the last time I was on the Reddit board, I saw a post. I was just talking about like why isn't there enough activity, and then I wrote a fairly, I was going to write a short comment, and it quickly became a fairly like long-winded. I'm like, there's so many of us. I think we're just waiting for something to happen, and we're just kind of handcuffed, just by the broader market right now. And the one thing that does give me a lot of encouragement, though, like is the fact that we hit a bottom here, we hit a bottom here, we had a mini squeeze, we have a bottom here, 310, 210, 210 again here.
Yep.
So just looking at ATER's weekly here. So we're definitely, we're still, in a what any chartist would call, a downtrend here. These EMA clouds here. So this is part of the white cloud sniper tool here. Okay. Red clouds represent regions of distribution where if it gets up to that price, someone's going to be like, okay, finally I can dump these bags. Let me get out of here. And then everything in the blue is like, gimme. We know that this is undervalued here. And, these blue weekly clouds here, they go everywhere from, well, actually, I don't know how real this is here because this is actually the light spring here. This one goes all the way down to 50 cents. I think this is volume here where like if a short sets their bid down here, they create this, these buys down here, where like, okay, if it gets to 50 cents, they'll cover. But then everybody else is looking between, what is it here, 583 and about Yeah, 223, 208 or so. So yeah, 210. That's right in line with what we know to be our force springs or so. So yeah, we're basically trading like at the bare bones bottom of our trading range right now. Even being at like 250 or so, it's still like extremely healthy accumulation and all that. We've definitely moved up on RSI just over the weeklies here. We had a bottom here. We had a bottom before our other squeeze here. We reached the same bottom here on higher weekly RSI here. So we know that there's actually been some rock solid accumulation here. And even being, at 210 the other week here, like the RSI was still on the weekly at 38. So that's very, very promising, for, the average ATER holder right now. And, and one thing I just speaking from this macro time frame here too, and thinking about, just where the market is right now, like we get these dumps followed by short squeezes, and ATER hasn't necessarily fallen on yet, but when there becomes an event where, something happens, let's say Apple misses earnings, like Apple's been getting a ton of buying pressure lately. And I think one interesting point I saw with Apple in particular is that like people, like retail is seeing that as like the last safe haven investment. So they're just buying it because they think it's going to be better than other tech stocks. Like 2 days ago, I think Microsoft was down like 2.5%, but Apple was up like 2%. Like that's one of the first times I think in months that's happened to a major FANG stock, where there's that much divergence between two, multi-billion-dollar tech companies, especially that well known. And, I think it's just from, retail, just like they want to park their money somewhere where they think it's safe.
So, and Apple right now is probably the closest thing you have to the safe, like a safe bet.
A safe bet, yeah. So yeah, people start dumping that, then it's like there will be a snowball at some point that everybody's just going to sell everything, and that unfortunately includes, there's probably going to be a few ATER holders. I think, they're going to have 10,000 or 20,000 shares, and they're just going to be like, I want to get rid of this at any price, and then suddenly ATER might be at 250, 280, whatever, and then you just see it go down to like 230, 220, like almost instantly. Like that's not going to be market makers. That's just going to be someone saying like, oh my god, the world's ending.
Yeah,
and
I was going to say that what I've noticed is like whenever those things happen, it's typically when the move happens after that.
Yeah.
Because like they wait basically till like the last bits of like they can shake that tree and then see who falls out on these really low lows, and like, oh my god, like the world's ending, and then ATER will run to 7.
Yeah, exactly. And it's like, and the thing too, I think what this is also telling us, and you can look at other small cap companies too. Like I saw someone put up a EVgo in the chat. That's one EV tech company that I'm actually like pretty strongly looking to make a pretty sizable investment in, because in addition to this retail company here, like charging infrastructure is going to be the next big thing, I think, over the next 15 to 20 years as we get more electric vehicles, and there's billions of dollars in infrastructure funding to put more of these charging stations throughout the
so who are the big ones? Like isn't F-Cell, they're another small cap that's like doing the same thing?
There's Fuel Cell, Plug Power, they're hydrogen fuel cell company though. ChargePoint's a big one, EVgo, Volta, Blink Charging. I think those four are the four biggest ones right now. I know there's like, I think 5 or 6 others that I remember off the top of my head, but just looking through at least some of the paperwork that I see for them, ChargePoint and EVgo, I think, are by far my 2 favorites. Yeah. I think EVgo will be worth more than ChargePoint like within the next like 5 to 10 years or so, just based on their fast charging technology.
Rissa says Blink also.
Yeah, Blink always has like really high. They have really high short interest all the time as well too, which is fascinating to me. But compared to the other companies, but I digress though. But yeah, I'm definitely looking into that. But my point, my broader point about like these small cap companies like EVgo and ATER is that when the bottom gets in on this market, we'll know that the bottom's in approximately whenever we see, VIX run to like 40, 45, 50 or whatever, because that's just going to indicate like max fear in the market. That's not to say that the markets won't bottom at some point down, because, 2008, there was we had our bottom like after Lehman went bankrupt, and then I think 3 or 4 months later, like the Dow or the S&P went down another 50, 60 points after that. But that marked the bottom. So it's like, even if the rest of the market still has like the rest of the bottom to reach, like small caps historically leads, the charge, into the next bull market. And a lot of these
that rotation, right?
It's a rotation, yeah, because
you got to put your money somewhere, and they're the most beat up ones. So you put your money there first, allow them to run, and then you take that money you made and put them back into mid and large caps.
Exactly, yeah. So it's I don't know. If you know about have you ever listened to Jeremy Grant?
No.
He's a fantastic guy to listen to. Like I wish I had seen his videos like months ago, because he was like, he runs the Agrarian Foundation. His biggest investment, I think, over the last like 5 years is QuantumScape, because he loves their battery technology that they're building, and it's going to change the game forever for, I think, electric vehicles. But like, he's been investing for 50 to 60 years, and he said, there's his foundation, I think, like, he's predicted like every single super bubble, that's happened since, I think, the 60s or 70s. So like, he said in
a lot of experience.
He has a ton of experience with that. And the one thing he says about this kind of stuck out to me, like, in terms of the market. So like, here's what happens in a super bubble, like, the one that we're in right now, the one that happened in 2008, and then there's the Japan one in 1989, where, your central banks, are just like, they're printing so much money, they have these quantitative easing policies where they're just, buying bonds, buying, equities from the market, and they're just, it's just pumping. It creates this extreme euphoria where it's just, people just, all they just want to do is buy, everything's going to the moon. But then when suddenly, inflation gets out of control, and then energy prices go out of control, which were also a thing in 1989 and 2008.
Yep.
What happens first is like, well, people need to save money. He says, the stocks that go down first are the small caps. So we know that was a thing here last year, because, ATER and many other, small caps like, GameStop, I guess, kind of gets included here too. They peaked in January or February of 2021, and then they've just been on a nonstop downslope since then.
Yep.
And then you get to the summertime, mid caps like AMC, ChargePoint, I guess, was in there too. They were like $50 a, share at one point, and then, they got beat down to like under 20. And then there was like the final rally, which was November, December of 2021, where like Apple, Microsoft was going up, and I'm like, my portfolio is down 50%, but yet the market's making all-time highs. Like, what the hell's going on here? So it's like, I think anybody on this channel, I think, who's traded through this will realize, like, okay, next time I see Apple's and Microsoft's and Tesla's reaching all-time highs, while all my small cap portfolio stocks are down 50-60% at that point, you're in trouble. Well, I mean, at that point, you've taken such big losses that it doesn't even, people get jaded and it just doesn't matter anymore. But if you're long on stocks like Apple and Tesla, it's like, these are about to come down another.
That's the last frontier.
They're the last frontier. Yeah, they get completely obliterated too. And
not just when you look at like, something like Netflix.
Mm-hmm.
Netflix was down how much? Like 50%?
Yeah, they went from like 700, to they're like 160, I think, the share now.
Oh my god, yeah,
like the put volume on that, like just the last month, like it's been worse than the SPY. Like there are like $5-10 million put bets coming in on Netflix. Like if that's any indication of what's to come, I think Netflix is about to get just absolutely completely slaughtered by the next earnings. And we know, like, it's already down. It's like, people are like, can this get much worse?
Well, yeah, they spent too much money. They were putting out stuff that didn't quite increase membership. Like, they already had high membership, and they kept spending more and more money on things that it's like, now, and then they raise prices, and then they're losing customers now.
Mm-hmm.
So it's like a perfect storm of, like, oops.
Oops, it's, they did that. And then, the other thing too is that the United States dollar, it's like, contrary to like, if you think like the dollar is strong, that means the economy must be strong. Well, that's not necessarily the case.
No, it's just everything else is crap right now.
Yeah, it's like, we have the least, what's the least dirty diaper out of the diaper bag right now.
Exactly.
It's like the United States is like a light soil compared to Europe, which is just like, like chronic diarrhea, where they, instead of, breast milk, they were drinking Taco Bell hot sauce.
Exactly.
That's how bad they're shitting themselves right now. And Japan is, it's what, like 137 yen per US dollar right now. Like they're they're still on an easing phase right now.
Yep.
So if like United States companies trying to sell their products to an overseas, company in Germany or Japan right now, it's like, they need a lot more of their currency to purchase the same dollar
Yep,
amount.
exactly.
So like any company that deals with overseas, transactions and does that as a major part of their business, like they are the ones that are about to get totally and completely crushed by this upcoming earnings recession here. So that's kind of the big thing too. And like, honestly, I think a lot of, coming back here to Aterian for a second here, I think a lot of our products are, they're dealt with domestically, if I'm not mistaken. Like I know we do import a lot of our stuff, through the shipping containers, and, they come here and, they get distributed like, sort of an Amazon, I guess. But yeah.
But they've stocked up a lot on inventory because I think they weren't sure what the shipping rates were going to be, so they were like, all right, let's just bite the bullet now, because they increased their inventory from like 65 million to like 75 million, if I remember correctly. So they do have a good amount of inventory just sitting in the U.S. ready to go.
Yeah, that's definitely good. I think things are definitely looking good. It's like the fact that we're this deep into a recession and a bear market, and they're still quarter over quarter like doing better with their earnings. They're getting better deals on their debt, and even though they're going to need more cash at some point, obviously it's like they're well on their way, I think, at some point to becoming very profitable within the next few years. And at $2 and something a share, it's like they seem like a very extremely obvious candidate to emerge from this, extremely successful. And I think one advantage Aterian's going to have, like after this bear market is over, is that other like online retail companies, I can't really name any off the top of my head here, but you'd have to imagine the competition's going to get dramatically. Yeah, it's going to get thinner. So it's like, Wish, I guess, is probably another one I can think of. Like, I have a couple friends who've used Wish. They're absolutely not impressed at all with their products, but they do like that they're extremely cheap. And, if they can get at least, some oversight on some of their products, like they could be a reasonably good, profitable company too. I mean, what you're getting, when you buy a Wish product, but, if there's 20 horses in the race here, and then you come out of, Aterian, Wish, and maybe Jumia is another one that comes to mind.
Yeah.
If they're on top, they're going to get much, much bigger pieces of the pie. And getting back to the start of our conversation where we said, at some point, looking forward, that, small caps are the first ones to get shot, whenever the big collapse is about to happen. Well, they're the first ones that also get like the
recovery,
initial recovery of capital in there. It's like, well, $2 a share. It's like,
I could buy this whole company for a fraction of what I paid for my large caps.
Exactly. Yeah, it's someone like Morgan Stanley or Goldman, with their $1 trillion balance sheets, it's like they could put $1 billion into the stock and they would be able to buy up like 50% of the company in one day if they wanted to. And that's the thing. And like, that's what's going to make, I think, like, once we get to, the Volmageddon day, for the stock market, where, VIX goes over 40 and everybody's panic selling, and it's like, I want I want more Aterian, when it's less than 250, 240. Even if it goes down to 210, it's like, more for me. You can't really snipe a bottom, but we know from having been in the stock for such a long time that that's about where you would expect it to fall off if it does get that low ever again. But
yeah, and I think I actually did some calculations on just like some like rough stuff, and if you take current assets off the last August 8th, when we get the new balance sheet, I'll have a better accurate number for going forward. What's going to be the like absolute like when it doesn't make sense to short anymore, because the company's still like around, and even if they add dilution and get some extra cash that way, it's still going to make sense. Like, I think it was 186 or something like that was the number I came up with for the last quarter. Was basically, if you discounted some inventory and stuff like that, that's what current asset values would be. Where like, yeah, I mean, but like that was like absolutely like I discounted inventory. I didn't account for any like of the like quote unquote soft stuff. Like Aterian on the balance sheet has like 290 something million on their asset side, But like I took out all of that and only accounted like 124 million off their balance sheet. I was just trying to come up with like the absolute, like, where does this not make sense anymore, like fundamentally. And I think it was like 186 or something like that was the number that I came up with discounted inventory and, like, you know, just taking out all the extra stuff that you could possibly be like, okay, well, you know. But yeah, I was going to say that would be, like, to me, insane, because basically at that point you would be more profitable to liquidate the company. Anything below that, like, you literally would be more profitable liquidating the company at that point and holding the shares at those price levels. So this is like crazy. It's gotten this low.
Yeah, it is. Yeah, the fact that like I'm looking at the daily chart here. You know, like we had 210 back in March 14th, 2022,
and then we hit it again, right?
Yeah, July 1st. It looks like we hit it. 213. It looks like was the low.
I think it was 211 that day, if I remember correctly.
Actually, no, June 30th. Yeah, according here. So yeah, we hit a low 210 that day.
It was 210. Okay, I wasn't sure if it was 210 or 211, but I was eyeballing it back then.
Yeah, RSI, daily RSI, when we hit that new low was up to 40.54. So there's definitely some, bullish divergence on the price chart here. Just from the daily timestamp. Meaning that there's just more daily buying. For the stock. Compared to. The first time we got that low, and
everybody was freaking out.
Freaking out.
I think this run right here to 7 gave people like, oh, okay, this stock isn't completely just dead, because we fell for so many months that eventually, when it got down to that low, people saw that the stock could move. They were like, oh, well, maybe it's okay. So when they got back down to this 210 this time, they were like, okay, we'll just add more.
Yeah. Yeah, exactly, and it makes sense. I think one thing I've certainly learned myself, trading this particular bear market is, conditioning yourself. Not like people will absolutely, they'll love to buy, like, for example, here in April, April 5th, we got up to 423, and then it's dipping, and then so many people, I remember these in the chat, they're like, oh my god, juicy dips, can't wait to buy more at 350, 380, and it's like, why didn't you save that money and buy it, at 230?
Yeah, because they didn't have confidence that it would move.
Yeah, exactly. And like, I'm hoping people take away from the fact that you look at where it's where it was at on this chart here, and you look at where it's at now, and it's like, this is still pretty darn good deal. I'm still not. And again, this is more my opinion than anything else. It's like, we still might have a little bit of room down before we see, one of these really nice size runs again here. But it's like, I'd rather be buying at 250 and, holding for an extra long time than, waiting to get in at 3, 4, or 5, when it actually runs and then stays up there, because of, if the last spike in ATER or spike downwards corresponds with, the broad market sell off here, we may never see $2 again, let alone anything in the low 3s. And then anybody that wants in, it's like you have to trade with somebody, that probably bought in the upper 2s. And, with what all this daily volume is, it's like this is going to gradually shift up and up and up over time, once the bear market's over, and, just moves the liquidity north. And, ultimately really good for the stock, because that just means that, the company's growing itself, and then, you're just, it's just growing on a fundamental basis. It's not growing because it needs to squeeze, which is basically everything that's happening. It's happened the last couple of weeks in the market. You get that news, and then it just suddenly it's like, why is the market green? It wasn't good news. It was, shorts being squeezed here. And so, but on the topic of squeezes here, so one thing that is actually better about ATER's chart this time around compared to, this run here. So whenever ATER, was just like, we were channel trading for a while here, we dumped down to 210, and then we had a nice little, 13-day algo cycle here where it's like we went up, retraced a little bit, double bounced off of 230, and then just out of nowhere, this is, I think, when, we had that short squeeze board, conversation there, and then retail just started piling on here.
Yeah.
I'm not entirely convinced it was all retail, that was behind this April run here.
No, that had been smart money, because I was going to say, I think they saw that the chatter on Ethereum picked up out of nowhere, and they just decided, okay, we're gonna do this.
Yeah, exactly. So like, when I made my Reddit post, I think, my last like really long DD, I think I was like, here's the algo cycle ended today, and I'm hoping not only just for a green day, but one that's backed with a similar amount of volume here. And I wasn't even expecting like 100 million, but I would have loved to have seen like, 10, 15, 20 million volume. And instead we got, what was it?
It still moved.
Yeah, but 4 million volume, I'm just like, I can't, it's like, I don't want to be a Debbie Downer to people, but I'm just like, my thesis, I need volume, I need to see something that resembles this. It doesn't have to be exactly this. It just needs to look something like that. And instead, like, I don't know that, but one thing that is actually kind of interesting, and it's kind of hard to tell here, but like, you look at these first 8 days or so, it's like, here's, green candle, smaller red, small green, and then uptick in green. And then here you get like, big green, half one that's red, small green, smaller green, and then, small red one in here. So it's actually, from a volume perspective here, it's actually 1, 2, 3, 4, 5, 6. Yeah, we're about 7 to 8 days here, but we have yet to really see, these parabolic moves upward here. Where the first 2 days, we went up, we retraced for 2 days, and then we had a second wave up, came down, and then 1, 2, 3, 4 days, and then we peaked at $7, before just getting bushwhacked into the earnings here. And I think this is the earnings candle right here, where like
gap down
gap down. We actually had a green candle, but like only because we started here and we actually moved up the entire day. Once people realize like, it was.
Oh wait, the earning per share wasn't as bad as it looked the first initial day, and it also dropped heavily during that time.
Yeah, exactly. And what I was just thinking about like this earnings here, and I was looking at Morgan Stanley's earnings report this morning, and I was like, the main takeaways from there for people that I guess didn't pay or didn't see it this morning. So like the bank missed their EPS, they missed their guidance cuts. They said that they're going to cut down their corporate buybacks because they think the economy's it's just not going to be good, and if they're going to be buying back, it's only for their stock to go down. Why do that? So what ends up happening, it's like, they start down at like -1, -1.5, and then by the end of the day, we're like, oh yeah, 1/4 basis point hike less, because, we think it's only going to be 75 basis points. Suddenly it's back to break even. I'm like, what the hell are these people thinking? Why are you buying on this? Like, seriously, and, when there's other equities out here like ATER where it's like, you're trading below asset value here, and, there's limited floor here, it's just, these, the market right now, I think they're doing everything they can, to squeeze shorts, and just, someone who still has a lot of, laundry, I guess, that they need to take out off their balance sheets, to clear it before they say, okay, send it down the elevator shaft.
Sure.
I think that's what they're doing, because, clearly some people just aren't seeing these balance sheets. They look at, a company like Morgan Stanley and say, oh my God, it's, $3 off today, let's, buy it up. But they won't buy a company like ATER, which is, higher
undervalued. Yeah.
It's extremely undervalued. Yeah. It would behoove, I don't need to convince anybody on this chat here, that Aterian's a good buy, at least in our opinions here, but like, buy something that went from 48 to 2, that has a ton of growth upside versus a bank that's, seeing credit default swap activity go through the roof. They're sidelining money to, pay for bankruptcies, and, that might affect their balance sheets. And like, you're sending the stock green on that, really? That's like, that's why I, like, you read my stuff in my chat, I'm like, people are like, it's priced in, interest rates have gone up, economy's deteriorating, our dollar's just, it's skyrocketing right now. It's affecting a ton of earnings, and it's like, the S&P today is only down, I think, $9 from where it was from the shock CPI report from last month.
Yeah.
It's like, what actually got priced in? I call bullshit on that.
No, I agree with you on that.
Yeah. So I don't know. It's like, yeah. But
what? Yeah, I was sitting there thinking about like just all these different like all these small caps have just been beat down over time. Like, have you looked at DTC?
I have not looked at DTC. What are they?
It's Solo Brands that make the Solo stove.
Okay, I've heard of them. Yeah.
You ever heard of Chubby's, the shorts company?
Yeah, Chubby's. Yeah.
Yeah.
I know Chubby's. Yeah.
And they make like fun shirts and stuff like that. They own that brand. They also make like folding kayaks and like a folding like paddleboard.
Mm-hmm.
So if you pull up their chart real quick, I just want to show you something.
Yeah.
Complete falling knife, like since they've been in the market, right? Solo brands, little fire symbol.
Oh my god, this is disgusting.
Just zoom out.
Yeah, let me widen this here a little bit. Yeah, they look fairly new.
Here's the thing, right?
Wow. Okay.
Yeah, look at that. They're not even, their balance sheet's not even that bad. The CEO just bought like over like 100K shares of the company, and so did the CFO. So insiders are actually buying.
This is sorry, I'm thinking out loud here. Yeah, so yeah, their CEO is buying. Like I can see why here. So like, looks like they hit a bottom here of about 366. They're trading at 424 right now. This is extremely bullish daily price divergence here. Where this has gone up and up and up and up, whereas the price is just more or less. This is flagging right here. This is definitely preparing for
a run,
a move up. I mean, it might need. Yeah, let's see here. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so it looks like it's caught between these 8 and 13-day cycles here. Just whatever computer bot's controlling the price of this one here, but this is trading above, support here. It's deep within the Wyckoff accumulation here, and it's really close. Like if it actually breaks here, like this is a pretty healthy. I don't want to say squeeze candidate per se, but to go from 420 to 6, 7, and if you get a blow off top here, up to $10. Yeah, that's 10 here. This could change a lot of people's lives here, Yeah.
So this particular one, though, I actually was fascinated by this one because their float is so messed up. As far as it's not a normal thing, right? So they came out with this, and I screenshot it. They reported 100 and it was 300% short interest or something like that. The float. And everyone freaked out, and everyone started looking at the stock then, and I did too. And what I noticed was they have Class B shares, which a lot of stocks have Class B shares, but in this one they're having trouble counting because the institutional ownership on the stock is so high. There's only 10 million shares available, so it's a tiny float too.
That's high, yeah.
So this is a stock that retail hasn't paid attention to this thing, but eventually, some people are going to get in low, and they're going to pay off really, really well, and other people are going to sit there and chase when it's in the 8, 9, 10 range.
Yeah,
or maybe more 6 probably, but there's going to be a fair amount of people that are going to chase this because this has the potential to move.
Yeah, no doubt about that. I could see this. Once a small cap recovery starts, this is easily going to, it looks like 950 or so, and then definitely 1050 to 11 or so, and then it's only 10 million shares, and there's just, and then you get retail driven, FOMO, and again, I could see this easily. I mean, it was only $15-16. I mean, that used to be a pretty standard entry point for a lot of meme stocks. Wish at one point was $15. AMC was even 30 to 35 for a long time. Even ATER, the first time I traded, I was like, okay, it's only $7-8 a share. I'm getting a good deal there.
Yeah.
Wait till these start. These are going to get some pretty nasty squeezes. When the bear market actually finishes up, and shorts are still short, but the market's actually okay, we're ready to buy again.
Yep. And they're going to when they start funneling these things in, these things are going to pop off like popcorn.
Yeah. Exactly. So,
but
thanks for pointing this one out. Yeah, this is bullish. This is really bullish. I mean, it might take a while because this has been flagging for 2 months at this point. But
But it's interesting because I was going to say their shares outstanding is 63 million, right? And their insider ownership, I believe, is somewhere around like 34 million.
Mm-hmm.
Then they also have another 21 million in institutional ownership.
Mm.
So they have like a ton of, yeah. So low PE, low PS, and low float.
Ooh, yeah. This is gonna be a nasty one.
Yeah, so I just wanted to put it on your radar because, and it's also a brand that a lot of people recognize because Solo Stoves is like a pretty big name.
Mm-hmm. Yeah, and Chubbies I know make really good shorts.
Yeah.
Like you're saying, so yeah.
It's an interesting one. And then the other one I was looking at was WEBR. WEBR IPO'd, I think, a year ago maybe.
This one here, WEBR.
WEBR and Revlon are the ones I've been looking at, just like on the side, just interested in like just seeing what happens with these things. But like,
what happened here?
Yeah, right. That's when as Wall Street Bets tried to squeeze them.
Oh, okay, all right.
But because they're big enough to actually be talked about in Wall Street Bets, unlike a lot of the other ones. But these guys, if you look at the zoom out,
mm-hmm.
Another falling knife. Just
yeah. It looks like someone got a little too greedy here, and then it's bottomed here. Very bullish divergence here, and then it just
slowly started going up.
5, 6, squeeze. Profit taking, and then
the actual.
The real squeeze. Yeah. There's always this. I think we'll see this probably when ATER starts squeezing too. Like instead of just getting these, you get like an update and then a retrace and then another update. It's just going to be just this steady like. It's like if anybody watched like this 5 or 15 minute charts today, it was just like straight green candles, like stair stepping up. It's like up. Like that's how it's short covering.
Yep.
And then some people are like, okay, I'm happy with my profits here. I'm going to take profits, and this is going from low 6 to high 7. That's substantial profit, obviously. So you can't find people there, and then you get sacked around where it's like, oh wow, yeah, this looks great here, and then. Squeeze. Liquidity's still low. Some people are still probably holding here, and then boop, and then kaboom.
Yep, pressure.
And what's great. What I love about this tool here too is that so you see like where it's squeezed here. So here's the body of the candle there. Clearly, like it just exploded up. There's all those volume.
Now those are all the bag holders right there.
Yeah, these are bag holders. Yeah, so like it's no coincidence that the top wick here was like right in a liquidity vacuum here, where it's like there was really nobody to sell down here. So it's like people, whoever was here bought the top. But notice how like the metal here, like it just went down here. People are like, I still want to buy here, and it's centered right at this historical support here, which apparently for the
10.
stock was in the 1030 to 1050 range.
Yep.
Yeah, and then it looks like when people realize like I don't know if this is going to last for too much longer here. So you have one more day. It's like profit taking here, and then just boop, and then you go down through the
panic sellers.
And then and then there was all this volume here. It looks like before, and it's reconsolidated here. So
yep. So, but do you think it's going to move slightly higher to like consolidate in that liquidity pocket right there?
Well, okay. That requires. Let me zoom in a little bit closer. This is my quick and dirty here, so I don't.
Yeah, no, you're fine. I don't think anyone cares. It's like none of this is financial advice. It's just two dudes talking about stocks.
Yeah, right. So, I'd say, so it's here on a support here. So this is kind of a.
750 is a strong support.
Yeah, this is it's clearly sitting on a pretty good support here. So when it gets above here, this becomes it's basically like VWAP, but
I actually sold some puts at 750 for tomorrow. I sold them though back during like the actual thing and got some good money for them.
Nice. Yeah. So you definitely.
I figured that's a pretty strong support. Like just historically, I was like, I'm gonna go for it. So.
Yeah, I'd say and if it's on people's radar and some like the market is like.
They have no volume. Like they have crap volume, but like it's still sitting on a support, and every time it gets down to like the 750, it bounces. So.
Yeah, so yeah, and it looks like it finished up here. So yeah, I'd say if SPY has a green day tomorrow, yeah, it's probably going to finish somewhere in the 760 to 790 range or so, and probably just flip a few cents or so here. But yeah, and even if it were to drop, like there's a little bit of a pocket here. So yeah, the next big support here would probably be in this 7. Yeah, I'd say like 710 to 735, 740. So if your puts do get a side, that's not going to be the end of the world.
Yeah, that's kind of how I was viewing it.
Yeah, because it's like if you receive your shares at $7.50 and then it pops up to $8 again, it's like you're making $50 per 100 shares or so, or whatever it is. So that's not bad money. That takes the wife and kids out to a movie. AMC movie preferably. So it's not bad. This is doesn't have a whole lot of data though. I noticed it's only been on the exchange for a little bit of time here, but yeah, if this does see volume again, this will $10 is definitely 10 to 10.50. It has some work to do to really get through that here. But
nice.
Yeah, I don't know. Yeah, I'll watch this one. Yeah, this is kind of to be determined. It's just an interesting flag pattern here where it's just like up. Like, yes, it's clearly, this isn't that well controlled on anyone's algorithms right now, because otherwise you would just get these, very clear like barcoding where it's making distinct wave patterns, where here it's just someone decides, hey, I want 200,000 shares, and that's like the biggest trade of the day. That's not a computer bot behind that. So this might have some hope just for that reason, because you don't have some hedge fund, that has 2 million of these shares that they just ping pong in these high frequency trading bots.
Yeah.
So yeah, just my opinion, but that's just based on how this price looks here.
Nice.
But yeah, I want to get back to ATER here.
Yeah.
Because so since ATER's been a thing here, so they have I forget the time here, but they have the algorithm has these 2 blue supports here. So this is basically support, this is by accumulation here. So like whenever it touches here, normally you get like a spike upwards, and then whenever it drops down and then tests and gets rejected, then it's like you get to a secondary supply, which is a second blue line. And then of course you have your moving average clouds where, the computer bots and the traders, they set their, they set their buys, shorts will set their, buy prices, at these stupidly low prices. And then your, day traders and other computers, they'll look here and they'll say, okay, well, based on Fibonacci and et cetera, this is where we want to buy here. So these buy and sell zones, tend to be pretty reliable here. And, coupled with the volume here, which we can see, ATER right now, so what ATER has going for it right now is that, that day that the algos flipped here, that we got a nice big candle here on the daily. It settled up here, and every day, for the last 1, 2, 3, 4, 5, 6, 7, 8 days or so, like it's actually closed above the support here. So it has not 1 but 2 supports here. One at 220, 225, and then a secondary one down all the way at 187. So this to me, just on the daily, this line here for me is, the market totally goes to shit one day, people are just panic selling, it's going to flash to here. So like,
and is that 186, 87?
Yeah, and I think that's pretty close to your number that you got her, right?
Right. Interesting. Yeah. Weird coincidence.
Yeah. It is weird. Yeah, it's kind of funny how this works out. Because it's like, Astra, he's the guy that programs this algorithm here. It's brilliant in the sense that he pulls the volume, and he's explained it a lot of times, I guess, just like on his channels and his tutorials, and even like in here. But like, this is basically, it's like, just kind of like backwards programming, like where the computer thinks it's going to go. And, just, if it's out of support, it gives you just higher probability chances of making a decent trade here. So the fact that ATER right now is like, it's trading above these accumulation bands in the daily, and it's kind of just working through a volume zone right now, but it needs more volume in order to like get like a nice push here. But I would think though, just based on, so these distribution clouds, like where people are like, like they want to sell, they want, like, I'm not talking like people in the Discord here, but there are other ATER holders that, aren't with us, they're like, okay, I've been backholding this for way too long,
Yeah.
And, they're going to look at, anywhere between, it looks like, 302 all the way up to 398. They'll be like, if it gets up here, I'm going to be happy, take some profits here. And then, if it's up there, there's going to be new buyers that say, okay, ATER's moving again, I'm definitely going to buy here. So you're basically trading a day trader from a bag holder.
Okay.
And you're cycling volume that way, I think, here. But every day that it goes by that it doesn't go down here, like these clouds are just going to move down and down and down. So it's like the distribution is going to be, eventually it's going to merge here. Like that's why this move back in April was so explosive, because at a certain point, like there's just so much shorting going on and people like, I want to get out. That's, when the accumulation clouds start crossing with the distribution clouds, it's like, you just get a ton of volume that just cycles like almost instantly, because it's like, I'm buying, I want to buy at a higher price than you're willing to sell at here. So it just blows up.
Yep. And that's, that's how a lot of these are is, once they start running, then they run hot.
Mm-hmm. Yeah, they run extremely hot. Yeah.
I was going to say, the last thing I was going to ask you was, what was this tool called? The
Wyckoff Sniper. It's under on TradingView. It's called sort of 1,000 Truths.
Okay.
Yeah.
Gotcha.
I did leave a review there. Yeah, for people that want to read it as well. Yeah, it's just kind of like what my impression of the algorithm is, because it's really great with ATER. Like it's pretty consistent. The real bread and butter is for like AMC and GME, which I occasionally trade. I'm not like. I'm not an OG ape, just straight up, because like, I'm more of like someone who's like, okay, if I see AMC at like 10 or 11 and I know it's going to be, 15 to 16 in like 2 to 3 months time, like
sure,
who's not going to want to take a 50% profit? And, if they choose to do that 3 to 4 times, 50% compounded 4 times, that's over 300% gains, after just a couple of trades.
Exactly.
Yeah. So why not trade the volatility that way?
Yeah, I mean, my issue with AMC was more on their balance sheet, just because the amount of debt they had, whereas like GameStop has pretty much no debt. So
yeah, exactly. Yeah, it's tough to beat GameStop. But speaking of beat down GameStop, though, like, do you see? I think it was in the middle of the day. GameStop just ran
1 o'clock. I covered that a little bit with Alec, but I was gonna say, if you pull up the GameStop 1 minute chart, like in 5 minutes, it dropped $10.
Yeah. Yeah, I'm not gonna lie, I was a little salty about that, because I'm like, okay, like I know the split's coming up, and I'm like, it's consolidated pretty closely here. I think I can get a good deal on some calls here. I enter my calls, and then, a few minutes later, they're down 30%. Like, what the fuck? Mm-hmm. Like, it just went down. Like, yeah.
I had the same deal, because I was like, okay, we're hitting this like area that I drew out, and it looked like it was going over. So I was like, okay, I'm going to go buy some calls here.
Mm-hmm.
Because I was like, it's starting to break through this area, and that I drew out, and exactly right, like at 1 o'clock, it just dumped.
Yeah, it's funny that it dumped like that too, because like just with how good the SPY was doing, especially
completely counter to what the SPY was doing, and I was like, really, like,
yeah,
you dicks.
Yeah, seriously.
But like, what was it? 10 minutes? No, like it was less than that. It was like 5 minutes, right? It was like 5 minutes. It dropped like $8.
Yeah, it went from 146 to 136. Yeah, it's like at the bottom of this wick here. And notice, just even with this tool here too, like there's a secondary support. It came. I think Astro, he has a slightly different one, but like it basically touched it like right on the money there, and then it just immediately rebounded there. So like, if I was actually looking at it while this is happening in real time, like I would have been like, normally like, if retail looks at something like this and they see their calls just went down 40%, they're like, oh my God, life's over here. But like here, like I would be like, like absolutely, just go one right here. Cause it went like, this is 5 minutes here. It goes oversold to 21, like almost instantly. That's
what time frame are you on?
This is 5 minutes.
Okay, yeah, I was gonna say on the 1 minute, I think you touched like 3 RSI or something stupid. Like I was looking at it, I'm like, holy crap! Like, what just happened? Where is it?
Yeah, I'll have to go back.
I mean, it was so low that like I literally couldn't see what the like number was at the time. I was like, yeah, look how low it dropped. You can't even see it on your chart.
Yeah, yeah. It's like these candles are supposed to be pretty small in the 1 minute here, but 1, 2, 3, 4, 5.
Yeah, so on that fifth one, it dropped down to like, I don't know, like something like 6 RSI. I was like, 30 is
Yeah, it
oversold.
literally is off my chart here. Yeah.
I was watching that today going, are you kidding me? It hit like 6 RSI, like 3 or 6 or something stupid. I was like,
Yeah.
I don't think I've ever seen that before.
Yeah, someone in the chat, I know they pointed out the spot gamma tweet where they're like, okay, somebody's dumping their calls here, and I'm like, okay, so like I think this is probably a combination of the market maker just like they sold off the contracts and now they have this pile of shares and they're just like, okay, we don't need these anymore. Here you go, retail. They just feed them 500,000 shares or so. And how big is GameStop's split? Just out of curiosity, right now.
It's actually not that big. I mean, it's I think 78 million. Let me check real quick.
Okay, so yeah, 500,000 shares dumped on at one time that's like.
Yeah, I mean that was a large.
So
shares outstanding is 75 million. Float is 63 million.
So yeah, that's like 0.7% of the float. Yeah, so yeah, on one transaction, yeah, like normally that would go as like a block, the dark pools.
Yeah, but they wanted that to hit the lit exchange. They wanted retail to go. Oh, what are we gonna do? Like maybe stop buying calls.
Yeah,
they had to install that fear.
Exactly. Yeah, but yeah, think about, you remember Amazon though, they had a split though, what was it, a month or two ago?
Mm-hmm.
Yeah, so like that was actually part of, like when the SPY was rebounding from 362 to, 390 or whatever it was. Like Amazon, I know led part of that because, people were just like, okay, if I buy 25 shares of Amazon, I'm going to have, what was it, a 20-to-1 split or something like that. So, they could get, 500 shares, for every 25 that they buy. Something to that effect, I think. But yeah, it's like, you're just, you accumulate that buying pressure over, a long period of time. And then, of course, if you're short, and you don't want to be part of that dividend, you have to cover, 2 days before the actual split date. So yeah, if you're giving retail, 500,000 more shares and someone's like, yeah, I'll eat these up. Now, suddenly, if these $150 calls run into the money again, and you have 50 million less shares to put at here, like
they have to then start collecting them, buying them back again.
They have to buy them back again at some point. Yeah, what if?
But I was just saying they're going to try to keep that thing from running. And my guess would be, I didn't look at the options chains for GameStop, but I would imagine they probably were. Man, I have to get to my own stuff now. Or Texas stuff is making me try to sign up for something. But let's see. Are you able to pull up the options chain, or do you want me to do it?
Yeah. I can.
Or should we just go? It's late.
Yeah, I mean, yeah, I can look at that tomorrow. I think probably go.
Yeah, but
that.
GME, I'm just looking. So there is. I'm just looking at open interest real quick. It is. So at 150, there was almost 7,000 open interest, and there was 17,000 on the call side.
Okay.
So 17,750 for volume today on the 150s.
Okay. Yeah. So
that's a huge amount.
That is huge. Yeah.
They already had 69.24 for the open interest at 150.
Yeah. So yeah, that's about 650,000 shares that would have to be tied up.
Yeah.
Yeah. That's pretty absurd, but.
And if you think about it, they had volume of 17,750 on those 150s.
Yeah. Yeah, that's crazy. It really is. But yeah, I think the thing that's what'll have to kind of happen, I think, for GameStop to continue upward, and I think it has a higher probability just because it has this fantastic catalyst. Like it's one of the biggest ones that any company can have, with like just a straight up like stock split is, like after this option expiration next week, I think, well, hold on, let me back up a second here. The split dividend date, I think, is what, the 22nd, right?
Mm-hmm.
Yeah. So that means by the 20th of next week is, that's when anybody, if you want your shares, I think you kind of have to be on the books, for them to, actually split the shares up. That'll include the ones on short interest, I guess. So if there are actually any, naked shorts in the split, I think they'll probably get exposed at that point. So it's like, yeah, my calls got their clocks clean today, but it's, to me, it's theta. Yeah. I'm not even worried about the theta so much. It's just, the possibility that this is a temporary drop, probably a shakeout, honestly, because, and honestly, I think this is probably market makers because, some people obviously I'm happy with the profits here. They're probably holding their call since 120 and, they want to close out before they expire.
Or roll them.
Or roll them, yeah. So, yeah, if you roll them, then you have to sell them. And obviously that puts, more shares on the market, but that also means that it's loaded again for next week. So it's kind of a catch-22. That's why ATER ran for so many consecutive weeks. People, there were a lot of people that, just straight up, kept their shares when they exercised the calls, and then others just kept rolling them. So on Fridays, you would see near the end of the day, the price would dump because, people were rolling their calls in the next week, but then that also reloads the gamma ramp for the following week. Because,
yep,
now you have more open interest, and then, it's what was it, 12:30, and then, 3:30 Eastern time, Mondays and Tuesdays, ATER would be it's doing nothing, oh my god, they're, shaking us, and then just massive green candles, right at the close there, because market makers are oh, yeah, we have the stock at every 50 cents here, we better buy it, and then, you buy it, you raise the price, you move it into, higher gamma territory, you need to hedge those again, and yeah, so this is going to be basically a gamma squeeze, and I think, just based on the history of the stock, I think I would have to think somewhere at least 175 to 200 is the absolute minimum that this reaches before it's, at least before the split date. With the possibility of higher, if there's actual naked shorts in this thing that causes a serious short squeeze, and then at that point, the next week's option chain is just gonna go bonkers, and that's when you're gonna see some real FOMO buying, I think.
Yeah, I agree.
But yeah, so.
All right, this is fun. I was gonna say, you want to do this again sometime?
Yeah, absolutely. Yeah, it's good to actually. Just kind of be home here. I was hoping to do some more social activities while I was down in Texas here, but I'm just totally beat up still, to be completely honest. And I'm going to be going to Wisconsin here in a couple weeks for a conference, and then Michigan for giving a seminar up at Michigan Tech, and then going to take some vacation time after that to just go visit some family.
Yeah.
So I got busy couple. Well. Yeah, these next few weeks will be a little more on the calmer side, but August is, it's next round of field season and conference season. So, hopefully by then, we'll have some exciting stuff to talk about. I think, once ATER starts seeing some serious volume again, I think, we can definitely do a special edition, ATER talk once things actually get a little bit more interesting. But the only thing I can really say right now, at least in terms of that stock, is just accumulate when you can, not financial advice, obviously, but you want to, if you want to be a part of a decent squeeze, get in while it's still cheap, and, play your probabilities accordingly, because, once it's $3.50, $4, and, especially if VIX doesn't spike at that point, it's going to be harder to get in for these prices that it's in right now, if, you have the needs to. I mean, me personally right now, it's my ATER account also has, it's 1/3 UVXY as a hedge, and it's what I've been able to cycle on that. It's if we get this down to, if I'm lucky enough to get in for, 220, 230 again, it's what I'm mining off of that, it's going to help me a lot.
Yeah.
Just to build that account up a little bit more.
Very cool. All right, dude.
All right, yeah.
You have a wonderful evening, and everyone, I hope you enjoyed. We had a long stream today, so hopefully everyone gets to check it out and you got to see DZ.
Yeah, I'm a real person.
Yeah.
So.
All right, dude.
All right.
Well, good talking to you, and I'll go ahead and talk to you tomorrow on the chat, and we'll see where everything ends up.
Yep, thanks, Anon. Yep, much appreciated, and everybody else. I'll be on the chat bright and early tomorrow, so we'll talk then.
All right, man. Have a good one.
Yep, take care, everybody.
All right, bye-bye.
Yep, bye-bye.